India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, Tuesday morning, and it is the occasion of Dhanteras. So here's wishing all of you, your families, your loved ones, a very happy Dhanteras from all of us here on the Bazaar team. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surbi. Guys, hi, good morning. Happy Dhanteras.
Good morning.
Good morning and happy Dhanteras to you, Prashant, to you, Nigel, as well, and all our viewers. We are wishing you the best of health and wealth. May it be a very positive, prosperous and a season filled with lots of hope. So Diwali festivities officially begin today.
Well, and I know who's going to be buying something new today, Surbi.
Considering where gold prices have headed, I don't think so. But yeah, we'll see what we can do.
Get it higher, so higher still. Yesterday we got the first semblance of a bit of a pullback, and I think that was good to see. I'll start with where we left off yesterday in terms of things you need to know. U.S. markets, they drifted higher, and I'm using the word drifted because it was a bit of a drift overall. S&P ended about a quarter higher, NASDAQ was up about 0.25%. The Russell, which is the broader small cap index in the U.S., that was up about 1.5%. So, you've got a bit of a lift coming through from overnight markets. So there are lots of things lined up, but immediately right in front of what the market is focused on, it's big tech earnings. The Magnificent Seven, 5 out of 7 companies report this week. And of course, you've got the US presidential elections next week. 5th of November is going to be the elections. The 10-year yield has gone up 4 basis points again last night. So 4.28. Dollar index is kind of flattish. Came off a little bit, but not very much. 104.29 or so. Oil prices, it's not new news you're waking up to. When we were trading yesterday in the last hour, oil prices were down about 6%, and we come back with these kind of cuts. So about 72, not very much in terms of change, incremental change on the oil price. So the Nifty, just to sort of tie in the levels, has got a positive daily close. So it's the first basic step after a drawdown that you need to achieve for any kind of hope to come back, that maybe we are starting to get a little bit of a fight back. So you got that yesterday. Now you got to take it across through hourly and daily averages. So you can look at hourly averages or you could look at daily averages. You can look at the 40 hourly exponential moving average, which we've been putting out, or the 10-day moving average, the sort of closest moving average, which stands at 24,624, is the first level that the market needs to, the Nifty needs to take out to confirm up move, to confirm upsides. Nifty Bank, it hit the 20-day moving average yesterday and then sold off from the intraday highs. And you need a close above that 20-day, which is 51,568 as of yesterday's close. And only then you'll see, or rather open the possibility of a bigger up move. On the downsides, I mean, the recent lows are all there, and we're well aware of it. So, you're looking at slightly upside kind of levels. I just want to say one thing. Over the next 1 week, 10 days, I mean, it's really a November to remember because you've got, all these earnings, big tech earnings lined up. Then you've got the jobs data this Friday. Then you've got the US presidential elections on the 5th of November, which is next week. The China NPC kicks off from the 4th to the 8th. And then you've got the November FOMC, which is on the 7th of November. So you've got all these big events which the market needs to navigate. And I think through all of it, will we see a kind of in any case, we're not expecting a straight line kind of recovery or anything of that sort, if we do see any recovery at all. But the fact is, these are large events with implications to be able to move markets around the world. So keep that in mind if you're trading. It's likely to be volatile, and the market is likely to be whipped around here and there based on what comes out of each of these events. And each of these are unique and are big because we don't know what is going to happen. It's all very close. The November FOMC, for example, elections are close. So I think it's got the potential to move markets. In any case, I'll leave you with, just 3 things and why I think, the market is pricing in a Trump victory. Polls and betting averages, etc. But just look at what markets have done. 3 things. Dollar is up 4% in the last few weeks, right? I mean, USD exceptionalism in that sense. The 10-year yield is up 60 basis points in the last 1 month. And you've got US equities which have outperformed ex-US peers by about 6% this month so far. These are large numbers, and I think the market is going in with maybe pricing in a Trump victory. So, going into the 5th of November, it's possible that as the market really starts to focus and narrow down, some of these get unwound tactically in the very near term because you're kind of priced to perfection with some of these trades. So it's going to be interesting next few trading sessions, but also most likely volatile. Surabhi.
Oh, well, absolutely. I mean, it's all eyes on the November 5th election outcome, right? And I want to add one more to the so-called Trump trades. I mean, look at what Bitcoin is doing, right? Yesterday, Bitcoin topped 70,000. It's done that in the past this year as well, but not in a meaningful way. So let's see if this bounce can actually last or not. But again, it's an extension of the fact that I think, Mr. Trump is seen as more pro-Bitcoin. There is Kamala Harris. She's also made, overtures and statements, in specific to sort of cater to specific constituencies, saying that perhaps they need to look at crypto in a bigger way. And Trump obviously is seen as a much more bigger support for cryptocurrencies, and that's really helped Bitcoin. So that's one. Now talking about our neighborhood. Now Asia has mostly taken on that positive handover from Wall Street. Most markets are tracking gains, including Japan. There's some sort of selling in mainland China. Hong Kong is okay. And so you actually have the Singapore market. That's the only one that's a bit of an odd one out. Otherwise, Asia's got a fair amount of green on it. Now, in Japan, a couple of numbers to track. The jobless rate came in for September, that is, and it's lower than expectations. The rise is about 2.4%. The estimates were 2.5%. The last month was also 2.5%. That's good news. But the bigger story in Japan is the weakness in the yen. Consistent weakness coming through, and the yen continues to hover at levels for, about 3-month lows versus the dollar. And for the month of October put together, the yen has lost about 6.5% versus the greenback. And that is largely seen as supporting, a lot of the export-facing stocks and companies in Japan. And the Japanese market, the rally has pretty much resumed despite the hung verdict that was delivered in the weekend election. Anyway, for us, there was good news, some green back on the screen as the festive season kicked off. Finally, the Nifty halting its relentless downslide after 5 consecutive days of fall. Yesterday was a buying day. FIs are still net sellers, and we've been debating this point, and Prashant was talking about it yesterday as well, right? But we still have about 3,500 crores of selling coming on a daily basis. Domestic buying was actually a little more limited, so it's telling you that, and especially the mid-cap movement yesterday, so it's telling you that perhaps a lot of the HNIs and the retail are coming back to the market because it was not just mutual fund buying that was offsetting the FII selling yesterday. Results now, and we're actually looking quite okay, at least some of the bigger ones that I tracked overnight. Bharti Airtel, solid showing because look at that ARPU go. Now the ARPU number has reached 233. That's a 10.5% increase on ARPU, looking very, very good. And this is as the tariff hikes have been very well digested by the market. So it's going to give a lot of the Bharti bulls a lot of hope. Some of the lenders, PNB, no asset quality stress or issues, very marginal rise in slippages, largely steady. GNP actually has improved a little bit quarter on quarter. If you look at Federal Bank, then actually very good numbers. And this is what some of the analysts were telling us yesterday. If you heard Digant Haria on the show yesterday, he was saying, watch out for good numbers from Federal Bank. And that's exactly what's been delivered. Because in this kind of an environment, the asset quality is pristine and steady. No major rise in slippages, no major rise in the gross NPA level as well. Look at, some more names. IGL, we'll talk about this as we go forward. There's a bit of a miss at the EBITDA line, but the top line's okay. And IOC, let's see if there's any follow through because the numbers came in during market hours, but OMCs have been a bit of a howler. So we'll watch out for that. Just ending with today's tally, it's an interesting day for earnings as well. A couple of Adani Group stocks report and Adani Enterprises Sports. There's Maruti, Marico, Cipla and Canara Bank. Maruti will be interesting. We know what's happening with the auto space and the lackluster start that we've had to the festive season. So let's see how the Maruti numbers look. But plenty to keep us busy as well.
Well, that's right. And overnight, if you're looking at the Qs, there are 3 big indicators, right? Brent crude prices, the dollar index, as well as the 10-year yield. And overnight, what's good is crude oil prices are well behaved. So that's come down by close to around 5%, which is the tailwind for a lot of listed companies, and it's a macro tailwind as well. So I like that, and that's something that will hold us in good stead. So that's important. Next up, what are the top cues of the day? Yesterday was a good session, actually. We came off the high point of the day, but yet it'll go down as a good session. The bulls will be hoping for some follow-through. They want to see another good session and head closer to around the resistance mark of around 24,550. We'll have the Nifty Financial Services Index that will also play out the expiry. And you've got 2 big companies, economy-facing companies that come out with their numbers. So not just their numbers, but their commentary is going to be very, very important. The double M's, that's Maruti as well as Marico. I'm going to keep an eye out on both these two. what did the FIs do yesterday? Now, we talked about the FIs being net short, and that's actually a blessing disguise. This is why, because yesterday there was a short covering bounce that took place. Big amount of shorts did cover up. Longs added close to around 14,000 contracts. The swing factor is close to around 35,000 contracts if you put this together. And just pull up the chart. In a matter of a few sessions, the FIs, from being net short by close to 1.7 lakh contracts, those short positions have close to have halved. Now we're down to around 95,000 net short contracts. There are still shorts in the system, but there has been some short covering on, and majority of it has been in the last couple of days or so. Let's move to the options data then. And this is the positioning actually before we get to the options data. You'll have the clients, well, they were net long, but they've reduced their long positions a little bit by close to around 25,000 contracts, though they continue to remain net long at 2.2 lakh contracts. Moving to the options data, 24,000 put, that was fairly active in trade yesterday. That's the reference point on the downside. And on the upside, the 24,500 call, well, that was active with the premium at around 50 rupees. So you punch that in, you'll see that 24,550 mark. That's the near-term resistance that we're looking at, and that's going to be the important mark. So you're in a broad band. 600-point band is what we're looking at. The high that we saw yesterday, that becomes important as well. And then you're looking at the 100 EMA. So that's the resistance zone that you're looking at. But in the near term, the bulls will fancy their chances that the 23,950 odd mark is holding out. Yesterday, the good news was the Nifty Bank. It showed signs of coming to life. It went past the 20 DMA, but it couldn't close out there. So that's the resistance mark you're looking at the upside. And the recent low becomes a reference point as well. So yesterday was good. You'll want to follow through session today, and you'll want the Nifty to close closer to around the 24,550 odd mark. So let's get straight to the action.
All right, Nigel, thank you very much for that. So that's the setup as we see it. Jeffrey Dennis is independent emerging markets commentator. He joins us now. Jeffrey, good to have you with us here. Thank you for your time. Is the market priming itself for a Trump win? Look at dollar, look at yields, look at the US outperformance, equity outperformance. What's your sense?
Yes, I think it is. I think it's moved definitely in the last 2 to 3 weeks as the polls have moved slightly in favor of Trump towards a Trump trade and towards the Trump trade. And I think markets tend to be all or nothing, in or out. And although the election is clearly still very, very close, although perhaps leaning now towards Trump, especially in those 7 swing states, the market's all in on the Trump trade, and you're seeing this in so many ways. As you've said already, a stronger dollar, higher bond yields, which have moved up very sharply recently. Equities, not quite sure where they go from this. And also, I think at the margin, a little bit more uncertainty as to how much the Fed is going to cut interest rates over the period until the end of 2025. So I think, the Trump trade or President Trump's victory now is getting close to being priced in. Maybe not fully priced in, but getting close there.
Hi, Mr. Dennis. Good to have you on. And by the way, festive greetings to you from us here in India. So, I guess a lot then kind of hinges on the November 5 outcome. And then what if? It doesn't go according to market positioning? Could that then, really halt the big move, the big rally that we're seeing in equities and, this move in yields that we've seen over the last couple of weeks?
I suspect if in the end Kamala Harris is elected president, I think the equities will probably rally more because equities have been very, very uncertain and volatile recently. The key thing to get to the factors behind the Trump trade, so to speak, is that Trump's fiscal plans are extremely expansionary. They're going to push up, according to independent analysis, the debt to GDP ratio of the US to around 135% by 2035. The Kamala Harris fiscal plans are expansionary, but nothing like as expansionary as the Trump plans. And what that therefore means, in my opinion, in the event that Kamala Harris wins this election, I think there'll be some unwinding of the things that have gone on recently. The dollar will pull a little bit lower. Yields might correct, might pull back. And that, I think, in the face also of perhaps, maybe a little bit greater optimism about the Fed being able to cut again, because the Fed doesn't want to see yields go too high. The Fed does not want to see the budget blown out of the water, which is what President Trump is suggesting with his proposal. So a Kamala Harris victory, I think, would bring a would bring sizable interest rate cuts between now and the end of 2025 back on the table. So I suspect the market at the margin, if Harris were to win, would probably do better in the first few days than if Trump were to win.
All right. Hi, Jeffrey. Good morning and good to see you. What about your approach to emerging markets? I recall in the past when we chatted, I think you were leaning more towards India in comparison to China and Brazil in comparison to Mexico. How are you approaching those markets now, particularly since the Chinese markets, from bombed out levels, they have bounced back?
Yeah. Well, I actually think, and I've been writing about this the last week or so, I don't think this is a great environment currently for emerging markets overall. We've got a stronger dollar, which is typically negative for EM. You've got sharply higher bond yields. Those together, plus you've got a little bit of uncertainty about how much the Fed cuts from here. I think they do cut next week, but nonetheless, there's a bit of uncertainty about what goes on beyond that. What that does is really make it hard, I think, for emerging market central banks to reduce interest rates as quickly as they might otherwise do, because it's going to put currencies under pressure. So I think the general environment here for EM is not that great at the moment until we get more clarity from the US election and from where these key variables are going to go. I mean, you're seeing that out there at the moment. EM is drifting lower, and EM has been driven all year by three markets: by Taiwan, by China now, recently, of course, and by India. Now, as I've said on this program before, my big worry about China is I still think it's going to be extremely difficult for the Chinese government to do enough, particularly on the fiscal side, to really solve the major problems the Chinese economy's got, which is low consumer confidence, low consumer spending, and of course the property sector malaise. And so, although I know India's had a tough few weeks here, I still think at the margin, given that these are not great conditions for emerging markets overall, I think India is a better bet, especially with this big collapse in oil prices recently, than is China. Just quickly, Brazil versus Mexico. I think the domestic situation in Mexico is very poor because of the political changes that have gone on and the challenge to the constitution. Mexico should be doing really well because of all the nearshoring that's going to go on under both presidents in the event that you get more production in Mexico going into the U.S. Brazil, I think, has great scope eventually, as long as the dollar doesn't go too high, to reduce interest rates.
Right.
And so I still Brazil to Mexico at the margin.
All right, Jeffrey, we'll leave it there. Thank you very much for joining us. Appreciate you being here with that commentary. Thanks indeed. So that's Jeffrey Dennis with the perspective on global markets. Let me quickly tell you the corporate interactions which are lined up here on the program. 8:40, you'll hear from the management of Suzlon as we discuss their second quarter numbers. A bit of a miss on EBITDA. Revenues, though, have come in better. We have the Mahindra Holidays management join us on the quarterly numbers. 9:20, Krishna Sangvi of Manulife Investment Management will be our market master of the day. 9:30, you'll hear from the management of Tata Technologies. Atul Kumar Goyal, MD and CEO of Punjab National Bank, will be speaking with us at 9:40. And we'll also have the MD and CEO of LIC Housing Finance join in a little after that. Poly Medicure, the medical equipment company, Mr. Tribhuvan Adhikari will be with us to talk about the second quarter numbers as well. Well, at 10:15, you'll hear from the management of Federal Bank on their second quarter numbers. So a lot of corporate commentary you'll hear between now and the next 2 hours.
Well, a lot of stocks as well as what we're tracking for you. So we slip into that break. We come back. We'll go full tilt on the top 10 stocks that we're looking at. Let's run you through the list, though. We're looking at Bharti Airtel, Bharti Hexacom, Federal Bank, Kifin Tech. 4 of them will be reacting to positive news flow, while we have JSW Infra, Suzlon, Tata Tech, LIC Housing Finance, Indian Oil, and IGL. All of them will be reacting to negative news flow. Slip into that break, come back. We'll get into further detail on all of these numbers.
Welcome back. So the setup is more or less positive, and we're expecting that some of the green on Asia is going to rub off on our screens as well as we kickstart trade. But it's all about individual stocks and really what we can do. That's the implied open, 20 points higher. But let's talk about the individual stocks. And our team is standing by with the CNBC-TV18 list of top stocks to watch this morning. Guys, Good to have you on. We'll start with Bharti Airtel, of course. Reema, numbers looking good?
Yeah, so operationally, it's a strong quarter in line with street expectations and driven by the tariff hike undertaken in early July. But at the bottom line, there is a miss because of an exceptional loss due to currency devaluation in Africa. So on the top line, the companies reported a consolidated revenue growth of 7.7% quarter on quarter, ahead of street expectations. And this is driven by a 10% increase in the India mobile business. ARPUs too for the company have gone up by more than 10%. And if you compare Bharti Airtel and Reliance Jio operationally on most of the parameters, whether it's an ARPU growth or the kind of decline we've seen in subscriber, the performance is slightly better than Reliance Jio. Bharti Hexacom too reported their numbers, and again, it's a good quarter driven by tariff hikes. Revenue growth of nearly 10% quarter on quarter. EBITDA margins have expanded to approximately 50%. There is an ARPU jump of 11%. Profits, though, appear to be, reported profits are down because in the prior quarter, we had an exceptional gain, and therefore the bottom line is distorted. But operationally, both Bharti and Bharti Hexacom have reported strong numbers.
Okay, all right. Thanks a lot for that, Reema. Well, let's hop across to Vivek. He's here to tell us about a couple of numbers. JSW Infra and Suzlon. Vivek, those numbers a little bit of a miss?
Good morning. That's right. Both numbers slightly disappointing, slightly underwhelming, to what the street was factoring in. When you're talking about JSW Infra, we'll look at that one first. Also, very good volume growth. Remember, a lot of inorganic acquisitions. So that has led to strong volume growth on a year-on-year basis. So in fact, when you're talking about the cargo volumes up almost 16% on a year-on-year basis. But what is actually, slightly underwhelmed the street is the fact that it's actually the group cargo volumes that have been slightly sluggish, but the third-party volumes this time around have kicked in. Now, when you talk about the numbers themselves, revenues higher by 18% on a year-on-year basis, EBITDA up 48%, margins quite strong, 67.5% versus 53.8%, profitability higher by 46%. In the conference call, the management toned down its volume guidance by sticking to the lower end of the volume guidance band. Earlier, they had a band of 10 to 12%. Now they're sticking to 10%. And when you're talking about the third-party, volume share mix, it's jumped up to almost 46% versus 36% on a year-on-year basis. So that's a key positive as far as JSW Infra is concerned. Now, when you're talking about Suzlon, very important, what's actually happened is that margins have significantly contracted both sequentially as well as on a year-on-year basis. Very strong top-line performance. So when you're talking about the revenues higher by 47.5%, EBITDA up 30.8% on a year-on-year basis. EBITDA margins, when you're talking about the reported EBITDA margin, 14.1% versus 15.9% on a year-on-year basis and 18.4% on a sequential basis. What impacted the EBITDA? Cost relating to ESOP expenses, SAP implementation, a corporate office lease, and we'll have the management a little later on, and we'll have to get some clarity in terms of what will be the sustainable or the EBITDA margin trajectory going forward. But order book very strong at almost 5.1 gigawatt, also getting in an order from NTPC this time around.
All right. Vivek, thank you very much for that. And you'll hear from the Suzlon management in a bit from now. Financials were, of course, all the focus yesterday, and they are today as well. Federal and LIC housing. Let's go across to Abhishek. Abhishek, good morning.
Good morning, Prashant. So happy Dhanteras to you and our viewers as well. Federal Bank, they reported a good quarter. The net interest margin has come under pressure. It is at 17-quarter low of 3.12% versus 3.16% YOY. But take a look at operational strength that you are seeing in the asset quality vis-a-vis peers who are seeing deterioration in asset quality. So gross NPA ratio is perhaps at a 9 or 10-year low of 2.09% versus 2.11% in the previous quarter. Slippages have remained stable on a sequential basis, and the annualized slippage ratio is at 15-quarter low of 0.75% versus 0.77% in the previous quarter. And operationally, if you take a look, the operating profits, they have grown by 18.2% YOY, which is the best in last 5 quarters. With reference to the PNL, NI is slightly below our poll. However, the PAT is 6 to 7% ahead of our poll. LIC Housing Finance operational weakness continued over here. Disbursements were pretty strong, growing at more than 27% on a sequential basis. However, the AUM growth continued to remain in single digit on a YOY basis for now 7 quarters in a row. So AUM growth is just 6% YOY. Net interest margin continued to decline. 2.71% is perhaps at a 7-quarter low. Their asset quality improved. Gross NPA ratio inched down to 3.06% versus 3.29% in the previous quarter. Operationally, if you take a look, the operating profit declined both YOY and quarter on quarter as well. Provisions declined, which which actually led to, PAT beating the numbers. So NII, if you take a look, 1974 crores versus estimate of 2,085 crore by Investec. PAT came in at 1,331 crore, while Investec estimated at 1,335 crore. Back to you.
Okay, Abhishek, thanks very much for those numbers. Let's look at Tata Technologies. Management sounding really cautious in terms of the commentary. Back to Rima for this. Rima, what do you make of it?
Well, it's a modest quarter. The company's reported a revenue growth of 1.6% in dollar terms. Constant currency revenue growth is 0.8%. Margins are steady at 18.2%. A little bit of a drop in the company's profits. But in the conference call, the company did talk about that they continue to see delay in decision making. US elections is throwing up some uncertainty. There's challenges with European OEMs, competition with Chinese OEMs in the EV space. That said, the order book and the pipeline continues to remain very healthy. Back to you.
All right. Well, that stock could pull back today. Irony that on the day of listing, it went to 1,300 rupees and now it's below the 1,000 rupee odd mark. So we'll keep an eye out on that one. But let's hop across to Sonal. She's here to tell us about IOC and IGL, and I believe both those two numbers are disappointing. Sonal, take it away.
Well, IOC is very disappointing, much lower than what the poll was suggesting. It was because of higher inventory losses, because of LPG subsidy, which the company did not receive, so they had to make an adjustment. Revenues were down 10%, EBITDA down 56%, margins halved on a quarter-on-quarter basis, profits in 180 crore rupees. But again, here there's an adjustment for reversal of provision created towards VAT input credit. If we strip off that, it would have been a loss for IOC this time. Refining throughput came in lower than estimates. GRMs at $1.6 per barrel, lower than estimates again. And the petchem segment reported a loss this time versus a profit last quarter. So it's an all-round miss for IOC. For CLSA has cut the EPS estimates by 6 to 20%, and Citi has cut the target price to 190 rupees a share after this number. For IGL, it was a mixed set. Volumes were at record highs, but margins came in much lower than estimates. Revenues were up 5%, but EBITDA declined 8%. Margins lower than 200 basis points, and profits were up 7.5%. Volumes at 9 SCMD is the highest that the company has seen on a quarterly basis. EBITDA per SCM, however, lower than the poll of 7.3 per SCM. Morgan Stanley says that the volume growth this time around was heartening. It is the highest ever that the company has seen. That implies that the impact from bus conversion to EVs is behind. There could be some red because of margin pressures, but there could be some green after that initial downtick we'll see on the stock.
Okay, all right. Thanks very much, Sonal, for that. Let's talk about K Fintech, which came out with numbers as well. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. A good set of numbers coming in from K Fintech. When we look at the revenues, they saw an uptick of 18% sequentially. This has come in nearly 6% higher as compared to what the street was expecting. All segments contributed to the growth in revenue, barring the global business services, in which the revenue dipped by 14%. EBITDA margin too expanded by 300 odd basis points sequentially to 45.11%. It has also come in much higher than what the street was penciling in. Again, out here, most of the segments have seen an expansion in their margins. Net profit saw an uptick of almost 31% sequentially, and this has come in much higher than what the street was expecting. Operational metrics also look quite strong for the company. Average AUM stood at 21.4 lakh crores. This is an uptick of 12.4% that we're seeing sequentially. This is more or less in line with what the industry grew at. Their share of overall AUM also rose by around 10 basis points sequentially. This is the 6th consecutive quarter wherein they've seen a rise. Share of equity average AUM was, however, flat at 33.4%. Additionally, the company also announced that the board has approved the terms of a JV agreement with CAMS for MF Central. So overall, a good set of numbers coming in from K Fintech. The stock is expected to open higher today.
Okay, got that. Vamakshi, thank you very much for that. So let's quickly recap our list of stocks to watch today. Fair amount of green coming through. So the ones that have positive news flow include Bharti Airtel, Bharti Hexacom, Federal Bank and K Fintech. The ones that have negative sentiment and earnings cues around them include JSW Infra, Suzlon, Tata Technologies, LIC Housing Finance, Indian Oil and IGL. Okay, so that's our stock list for the day. Let's figure out what the commodity cues are like as well. Manisha Gupta is joining in. Manisha, happy Dhanteras. Gold has been shining through the year, not just today. But really, what's top of mind for you?
Well, gold absolutely does, Sylvie, because this Dhanteras is looking at gold at an all-time highs. We're looking at 80,000 rupees at 10 grams if you were to step out and buy gold today. You know, usually around Dhanteras and Diwali, people buy 20 to 22 tons of gold. So while perhaps the quantum could go down, but the billing will not because the prices have gained so much higher. But we are looking at stronger gains continuing in the day today as well because of the uncertainty from U.S. presidential elections. The markets also are awaiting the third quarter GDP numbers, the non-farm payroll data comes in this week as well. So this is a data-heavy week in that sense as well. And even as the dollar index is trading on a firm note, we have seen gold continue to hold around that 27.50 mark, which is just about $10 to $15 away from its all-time highs. But the other commodity to watch out clearly would be the crude oil prices. 6% of decline in the overnight markets, which has been the biggest one-day loss in 2 years. But we have seen a bit of a gain coming in right now into the markets, and this is after U.S. has suggested that they are going to purchase 3 million barrels of crude oil for their strategic petroleum reserve. Also, a bit of a decline in the dollar index seems to be supportive. And in any case, a 6% decline yesterday has led to some opportunity buying into the markets right now.
All right, Manisha, thanks a lot for that. And as always, I go according to your advice. So 1 gram of gold is what I'll be buying, Manisha. As you've told me over the last many years, I think 13 grams because of Manisha. Thanks a lot for joining in, Manisha. Well, on that note, though, we'll slip in a short break. Up next, we'll connect with Avnish Agarwal of Prabhudas Lilladher. He'll help us with some fundamental talk. Welcome back to Bazaar Morning Call. Well, as promised, we have Avnish Agarwal, Head of Research at Prabhudas Lilladher, who joins us. Hi, Avnish. Thanks a lot for joining in. Well, let's talk about Tata Technologies if you're tracking that one. You know, on the day of listing, it went up, I think, 140% odd, went to around 1,300 rupees. And those that got allotted, they would be happy to sell on that day because the numbers actually are disappointing and the stock has come down. I think it's sub 1,000 rupees. Your view on this counter?
Yeah. Hi, Nigel. If you look at Tata Technologies and many of these ER&D companies, past 2-3 quarters have been very tepid. Now, the way the entire, for example, they drive a bit of sales, say, from Moto and some of the other ER&D segment, I think the outlook at this point of time is not looking that bright. If you look at the entire space, it is not only Tata Technologies, but some of the other stocks in the segment, they have also seen a correction. So I think in the near to medium term, the outlook for these companies remains to be slightly on the tepid side.
All right. So you would not look to get in even on a dip because you believe that fundamentally things aren't looking that good.
I think it might take a little bit of time for these companies to see some revival because the demand in Europe and some of the US markets has to revive for these companies to start again showing very good numbers.
All right. Let's talk about the stock that should open up in the green, Bharti Airtel. Actually, those numbers look quite good. You know, if you compare it with its peers as well, and even on in comparison to what the poll threw up. Your view on this counter?
You see, Bharti is actually gaining because of the tariff hikes which have happened first in the prepaid and then in the postpaid during the last quarter. So I think not only this quarter, for the I think coming 1 or 2 quarters, the base seems, I would say, benign due to this very factor. Although subscriber numbers that they are going down, but I think if the overall ARPU continues to move up, I think Bharti has got, you can say, many legs to move. Performance will continue to be quite good even in the coming few quarters.
Avnish, hi. Morning. It's been a really interesting quarter for financials, right? Banks and NBFCs, because it's so different depending on which lender you're with. Look at Federal today. I mean, they've actually managed to keep asset quality so steady when others are struggling. PNB's also seen a reduction in gross NPA levels. I think their credit cost guidance for the full year has also come down. So what are you sticking with and what are you avoiding? I mean, some names would help here because it's very granular, especially in the whole tier 2 category.
You see, what has happened in financial is 2 things. First of all, the unsecured book about which there were doubts earlier. So that is the risk in that they are coming to the fore. And second is the MFI book. So whichever company is having more exposure to these 2, they have been on the, I would say, they have been suffering. So if you say leave the top 2-3 banks, for example, IndusInd Bank, the numbers got hammered. IDFC Bank also suffered. So I think this now the MFI issue, I think it is going to take, say, some time to settle down, although a lot might have come into the stock price of many of these companies. Now, I think some of these companies, for example, yesterday BOB results were good, even Federal Bank numbers are good. So I think it is going to be very, very bank and case specific. But having said that, it depends upon the way you look at it. Some of the bank has done very well. The company has in the past traded at 1.8 to 2 times book also. So there is some scope in the stock to move up unless until you can say they also show some, you can say, negative numbers in the coming quarters. But having said that, I don't rule out some bottom fishing also happening in some of the counters which have seen sharp cuts in the last, say, week or so. So, but I think incrementally there would be some caution at least for the, you can say, 1 or 2 quarters.
All right. Abneesh, I request you to stay with us. We're going to go to the management of Suzlon and come back to you. That's the first management on the show. The company reported a strong top-line performance, actually, but margins were a little bit lower. The mix, in fact, seems to have changed a little bit. To understand what went on in the past quarter and, more importantly, execution for the second half of the year, Mr. Himanshu Modi, the CFO of the company, joins us. Hi, Himanshu. Good morning, and thanks a lot for joining in, as always. When I'm looking at, the deliverables, in the first half of the year, you've delivered roughly around 530 megawatt. That's, an approximate number. For the year, I think most on the street were working with 1.5 gigawatt odd. My question to you is, how much of your year's deliverables have you done in the first half of the year? And I believe the second half of the year will be much heavier. So how much is due?
So, hi, good morning to you all. So again, if you look at our trends in H1, typically we've always done close to about 35% of deliveries, and H2 accounts for the balance 65%. So by that token, if you look at it, we are inching close to anywhere between 1.3 to 1.5 gigawatts for the annual delivery plan.
Mathematically, it should be 1.5 to 1.6.
Yeah, well, I wish it works. It's 35%, but yeah, we are obviously working towards the best targets possible.
Got it. Okay. All right. So that's on the execution front. What about margins? It seems to be a couple of one-offs like the ESOP cost and a couple of other costs that hurt in the past quarter, and that's why margins did compress. But what's the margin guidance for the year? I think earlier when we were chatting, I think you were talking about around 16-17% margin, 17 to 18% margins. That would mean second half of the year will have to be far better. Do you hold on to that guidance for the year, 17 to 18% on an average for the year?
Let me rectify that. You need to look at our segmental performances because the company has 2 large segments, as you're aware. One is the WT manufacturing division, and the other is the services division. When you look at the consolidated margin, the consolidated EBITDA margins are bound to reduce in terms of percentage terms as the WTG business increases in size in the overall segment, because that's a single-digit margin business for us as compared to the services business, which is close to about 40%. The guidance that we'd spoken earlier on the 17 to 18% that you're talking about is with regards to the gross margin or the contribution margin for the WTG business standalone basis, which this quarter has been about 21.8%. So we maintain that it'll be in the late teens, early 20s gross margin on the WTG business. But if you look at the consolidated EBITDA margin for both segments put together, then naturally, because of the WTG increasing its share in the overall pie, the console margins on the EBITDA level are bound to reduce.
So what should it be? What should it be then? You've given us the breakup. As you said, O&M is higher margin business, WTG is lower, WTG's share is going up. So what should we work with? Give and take everything on a blended EBITDA margin, what should it be?
So I think, our WTG business will be high single digits in terms of EBITDA margins. And the OMS business will be close to about 40%, as is always the case. So I would say, early teens in terms of operating margins at a console level is what one should be looking at.
Morning, Prashant here. Sorry, on EBITDA, could you just repeat that, please? What's the guidance, EBITDA margin?
I don't want to give any guidance, Prashant, but again, I'm saying that, on the WTG business, we've always had high single-digit margins in terms of EBITDA level and 40% at the OMS level. So if you look at it on a blended basis, it will be in the low teens in terms of EBITDA margin at a console EBITDA level.
Okay. What about order book, Himanshu? What is the accretion you've seen? What is the outstanding order book at? And, could you give us a sense of where that will move up to or in H2, by the end of H2?
So we're currently at about 5.1 gigawatts. Of course, we secured the largest wind order in the country in Q2 from NTPC. That was close to about little less than 1.2 gigawatts. We have a very active pipeline, and I know whenever we've met, we've always said that this is the highest ever order book that the company's had on a quarter-on-quarter basis. And I think we'll continue to say that for a few quarters because the order pipeline is quite active available with us. So whilst I can't put a precise number on where we will be at the end of the year, but rest assured, I think there is a very large pipeline available for the company. And the current 5.1 gigawatt, the execution timeline for that is close to about 2 years.
Just some sense on, the kind of bid pipeline that you will be sort of adding to by the end of the year. And also some idea of, the competitive intensity, what's really happening in auctions, how are prices moving, and, what can we expect in terms of adding to the order book? If you could give us some rough estimates.
So, as I said, very difficult for me to put a number on what we'll be adding to the order book. But if you look at the industry in terms of, bids or C&I customers, order pipeline available out there, it is, 10 gigawatts plus. So, whilst there is some competitive intensity, but I think there is room for all of us to play in that market because, all of us put together as OEMs will need to be able to deliver upon that demand that's coming from all our consumers, from our customers.
Okay. Just a word on Renom as well. We spoke about it on the last call when the acquisition happened. So how is that progressing along, and by when does, everything get integrated and start reflecting in the numbers?
So for the quarter two, it has started reflecting. We started consolidating for about 25 days of quarter two. You'll see is reflected in our Q2 numbers. So of course, Q3 of this year would be a full quarterly consolidation of Renom, and we'll continue to operate it as a separate subsidiary, separate management, focusing on growing the multi-brand O&M segment. Whilst realize whatever synergies at the back end, but there is no intention of integrating the management as yet.
Just a quick question, Himanshu, on the blended margin, since FY26, the WTG segment could contribute even more. You hold on to early teens, or is there a risk that it goes into high single digits, the blended margins?
So very difficult for me to give any FY26 guidance, but as I said, it all depends. It's a function of how much deliveries we're able to do in FY25 and FY26. Because what you need to realize is the O&M business will, of course, grow, gradually at an inflation, or as and when we keep adding heat to our kitty. But the WTG business will, of course, definitely grow more rapidly than the O&M business would.
All right, Himanshu, we'll leave it there. Thank you very much for your time. Appreciate it here on CNBC-TV18, and good luck. We'll speak again. We'll take a happy Dhanteras and season's greetings from all of us here to everyone at Suzlon. Thank you. We'll take a break. Mitesh and Sudarshan are with us with some technical trading ideas. That's coming up. Stay with us.
Welcome back. So let's go across to our technical experts and get a sense on how trade could play out today and how could you be looking at your bets. We have Sudarshan Sakhani as well as Mitesh Thakkar joining in for that. Gentlemen, good morning and season's greetings to you. Happy Dhanteras, and we wish it's a prosperous and joyous Diwali for all of you. Let's start by understanding what the setup is like and whether yesterday's pullback, whether that can extend today or not. Mitesh, how are you reading the charts?
Good morning, Sulvi. Wish you and the entire CNBC family a very happy Dhanteras. Yesterday, rather day before yesterday, I was talking about possibly the markets kind of sustaining 24,315, bouncing back, but then we saw a new low. And yesterday we were at the trend line support area, so we did get a bounce back as I was bullish yesterday as well. I think the bounce back will be choppy, but as long as we are not breaking this level of 100 odd zone, give and take a few points, I think good chance that this bounce back will, with some volatility, play out and head towards 24,700, 750 zones. I think that's the level, which I'm looking at, unless until we see the Nifty start breaking below 24,100. So in that sense, I've advised people to exit short positions, take some long position with a stop below 24,100, and hopefully this bounce back should play out. So I'm still optimistic, though today I have a mix of buy and sell calls.
Got it. Okay, all right. Good morning, gentlemen, and happy Dhanteras to both of you as well as your families as well. So, Darshan, let's come across to you. How are you feeling this morning in terms of market action? What's the trade going to be?
Yeah, good morning. And I'm wishing everyone, all viewers, prosperous Dhanteras and hoping that Goddess Lakshmi will smile on everyone. Well, the markets have done their bit on Friday when they rallied from lows, and yesterday when we had a very handsome rally. I suggested going long yesterday. Today is not that day. For short-term traders, we have to understand that markets go through cycles. We've had a 1.5 day upswing, so the chances are that we will see choppy market action today. Now, it is possible to look for a dip and buy, but it won't be a very good quality trade. So the best trade is to step aside from the Nifty. The Bank Nifty continues to give an opportunity to go long. So focus on the Bank Nifty or on individual stocks, and take profits on the Nifty if you have long positions, and wait for tomorrow.
Okay, all right. Gentlemen, good morning. Thanks very much. Happy Dhanteras to both of you. Mitesh, what would your trades be?
Morning, Prashant. Wishing you a happy Dhanteras as well. On the stock side, I have a buy on Aarti Industries. The stock has corrected from 700 plus levels to around 500. Now it's giving first signs of a reversal. So this bounce back could see the stock head towards 525, 528 zone. And here I would recommend buying with the stop at 503. A buy on ICICI Bank, which has been a buy a couple of days back as well. So now can be bought afresh with a stop below 1280 for targets of 1320. And two conditional sells. Bharti Airtel, if it starts trading below 1655, that's where the short-term averages converge. So below that, sell with a stop at 1671 for targets of 1620. And similarly, Torrent Pharma, sell on a break of 3,300, keep a stop at 3,360, look for targets of 3,170.
Okay, that's pretty interesting on Bharti, considering the news flow is positive, results are good. Let's see, important levels to then keep in mind. Mitesh, thank you for that. So, Darshan, what about your stock calls?
Well, it's mainly on the long side. So I'll start with the one only short position I have. Havells is an intraday short. The stock has been having a cascading decline or a waterfall decline for whatever reasons. Consider going short with a stop above 1,700. NMDC is a buying opportunity, small sideways move, perhaps a breakout is imminent. Buy with a stop under 210. Wipro, which is coming out after so many years of doing nothing, has come in my buy list once earlier. Again, it's a buying opportunity with a stop under 545. And finally, Oberoi Realty, from the realty space, realty itself has been going through a deep correction in the last few days. But Oberoi Realty is showing signs of life. Consider buying with a stop under 1,900.
Okay, all right. Thanks very much for that, Mitesh and Sudarshan. Those are individual trades coming up. Well, 7% growth is very much doable in the current fiscal, says the DEA Secretary Ajay Sheth. In an exclusive conversation with CNBC-TV18, he adds that he expects the second quarter to look up with very strong growth in the third and the fourth quarters. However, some states have shown slower capex, but the government is still confident of achieving its target. Listen in.
Certainly. These are the estimates, and not just that RBI has estimated. Even if you look at what the IMF latest estimates are, they are also of the order of about 7% for the current financial year. So these are very much doable numbers, and one should not go by the first quarter number, which came at 6.7%.
Sure.
There are reasons behind it why those numbers were 6.7%, but we see that a very strong growth to come in the third quarter as well as in the fourth quarter. And of course, second quarter numbers will also be expected by 30th November. We'll have those numbers another month's time. And we do expect that overall year growth should be of the order of about 7%.
And so the government has so far stuck to its borrowing aim. Would you continue to be the same
through the financial year?
See, the overall borrowings, certainly there will not be any additional borrowings. But we did realize that the short term we were, compared with the previous year, we were having more cash balances at the beginning of the year than what we had estimated. Keeping that in mind, that short term borrowings, we have consciously moderated to some extent. But as far as net borrowings are concerned, that will remain the numbers what was put into the budget.
And so the government has announced a buyback program yet again. What has been the response to that program?
Response has been good. In fact, when we ran that program, or rather on our request, RBI ran that program 3 months back. At that point of time, response was not good. But in this month, there were two installments it was done. And somewhere of the order of about 50,000 crore has been the buyback. But what is the intent of that buyback? Intent of that buyback is to smoothen the repayment profile.
Right.
And as you will be aware that during the pandemic year, the borrowings had to be increased significantly, and those were of varied duration, some 5 years, 3 years, and even 7 years. So when more and more borrowings of that period come in a single year for repayment, that is not very smooth operation.
Right.
So it is for the purpose of smoothening the repayment profile. That's why this buyback is.
Well, and you can catch this very interesting conversation all day today on CNBC-TV18. Slip into a snappy break. Come back. We'll get you the pre-open rates. We'll also get chatting with the management of Mahindra Holidays and Resorts. Stay with us. Welcome back. Well, let's focus on the cement space then. And Amnish is still with us. Amnish, what's your view on the cement stocks? You know, all of them have reported numbers, barring the Adani cement companies, that's both ACC and Ambuja. The other numbers actually were disappointing. But all of those stocks are higher in comparison to what they were at the time of earnings reaction. Your view on this space? Are you factoring in a much better second half of the year?
Yeah, Nigel, actually, there are two reasons to it. One being the pricing was not there, and as such, 2Q is a relatively lean quarter, and we had prolonged rains this time around. Now, I think all these things were already factored into the stock price and estimates as people were expecting weak set of numbers. And I believe that there are a lot of hopes that 3Q will see reversal in the demand as well as some, you can say, restoration of pricing power. So that is what cement industry is banking upon, and that is why I think despite numbers not being good for large majority of companies, the stocks have not reacted. So I think 3Q will be the key factor to watch out for, that if the demand post-monsoon is good, plus there is some, you can say, bit of aid from pricing, I think the stock should be able to sustain the current price.
Got it. What about Zomato? You know, now we're getting guidelines with regard to Swiggy. That issue is likely to open up very soon. What's your view of the stock? It was looking like it was going towards the 300 rupee mark. Then it pulled back a little bit. But it clearly has a longer runway, and profitability is coming back into the fore as well.
This is Zomato numbers are pretty good. Now, if you look at food delivery, that is a more or less, I would say, stabilized business, and the bigger data is coming from your Blinkit business, and there are a lot of hopes from the ticketing business as well. Now, I think one of the reasons why the stock reacted is their plans to raise $1 billion. Okay, because that will, you can say, bring some paper to market, and you can say some sort of a dilution is going to happen. But otherwise, I think there is no change or deterioration in fundamental, and I think markets have also weakened if you look at, say, last 10, 15 days. So I think on the lower levels, actually, this Zomato looks to be an interesting stock to look at.
Okay, all right. Thanks a lot for joining in, Amnish, and wishing you a good day and happy Dhanteras to you, your team, and your entire family.
Thank you, Nigel. The same to you.
Well, let's move on then, and let's move on to our next management on the show. That's Mahindra Holidays. Well, the numbers were a little bit disappointing, actually, in the past quarter. Softish, but as we know, the industry itself has got a lot of tailwinds to go with it. So let's get a couple of details going with regard to the past quarter's numbers. We have with us Mr. Manoj Bhatt, the MD and the CEO of the company. Hi, Manoj. Good morning. First of all, happy Dhanteras to you, your team, your entire family as well, and hoping for a cracker in the second half of the year. Well, let's get a couple of details going then. Could you tell us, what was the occupancy in the past quarter? If you could help us out with that in the first half of the year. And what's the target for the year? And also, what was the quarterly membership addition run rate in the past quarter?
First of all, good morning, Nigel, and happy Dhanteras to you too. So thank you for having me on the show. So quickly, I think I'll just give a quick update on the past quarter. You asked about occupancy.
I think we lost the line there with Mr. Bhatt. We should just be able to have him back with us. So yeah, I mean, those are.
He's back.
I think Mr. Bhatt is back with us. Mr. Bhatt, go on.
Can you hear me?
Yes, we can. Please.
All right. So I was saying that occupancy is 77.5%, which is roughly in line with where it was last year, same quarter. And overall, I think room addition has happened. So overall, room nights have gone up. The other thing is in terms of member additions, I think member additions were about 3,500, 3,583 to be precise this quarter. And overall is 3.02 lakh members this at the end of September. So we're doing pretty well in terms of our own plans. The highlights really for me are, inventory addition. We added about 219 keys this quarter. We added about 3 new resorts, destinations. Also, from my perspective, if you look at the average sales value, what we call as AUR, that's at 5.05 lakhs, which is about 28% up compared to the same quarter last year. So a lot of positives, I think, focus on premiumization, making sure that our members are finding holidays. And I think overall, it seems like we are on track for a good second half also.
Mr. Bhatt, is there at the margin, good morning, Prashant here, the dominant sort of narrative or the talk has been maybe a cyclical soft patch. Are you seeing any of that? I mean, if you ask over the last couple of years, where did all the wealth generation which has happened gone? It's gone into real estate, it's gone into a couple of other sectors, and it's gone to a lot of holidays. Are you seeing any of it, any indication in terms of bookings or new member additions that tells you that maybe we are entering a bit of a softish patch?
So I think, first of all, I think our model is a bit different. So we are a member-based model. So clearly our occupancies, even in, as I see October and looking into this quarter, I don't see any impact in terms of number of people holidaying. Secondly, from an industry perspective, if you look at the numbers, I think occupancy is still up compared to last year, and the ADRs are still up compared to last year. So from that perspective, we are not seeing any signs of a slowdown in terms of people spending on holidays, people traveling. And that's something which, in fact, we were doing a consumer survey. And what came out clearly is that combining weekends, combining short holidays and long holidays, I think there's a lot of people holidaying 20 to 30 days a year, which is very, very positive overall for the industry.
It's not showing up in new member additions as well, Mr. Bhatt?
So new member additions, can you hear me?
Yeah, please.
Yeah, so new member additions, as I had mentioned last quarter also, I think we are looking at the right product market kind of mix for our products.
So you don't see any slowdown in the rate of addition, basically.
Yeah, so I think it is slower than last year, but that's more because of our internal choices we are making in terms of channels, but not really from a demand perspective.
Can you, Mr. Bhatt, hi morning, can you elaborate on that? Because, I mean, when we see the number optically, new members have fallen. I mean, the fall is 27% year on year. So one would quickly jump to assume that this is because there's lesser demand, but you're saying it's not that. So what is the issue?
So what, as I mentioned last quarter also, we embarked on a journey of looking at what channels to use from a overall product perspective. So for example, we have actually stopped going to some tier 3, tier 4 cities. We have eliminated certain channels in terms of looking at what is the optimum kind of profitability mix which we would need. So those are some of the changes which are impacting. We have actually taken out the 3 and 4 year product. We have replaced it with a 5-year product. So all of those combination of those things is causing the overall member additions to be lower. And that's directionally what we have said, that this year we are going to focus on premiumization. And that's where you see it coming up in AUR, which is up 28% year on year. So if you look at the total value, it's down about 6%. If you look at volume, it's down 27%. And if you look at value per sale, it is up 28%.
So, but by when do you get to the run rate that you've sort of laid out in the past, which is 5,000 members getting added on a quarterly basis? Given the strategic shift that you just described, are you still in tune with that target?
So I think that's something we are evaluating. I think we are coming up with a new strategy in terms of what is the right optimum number of members. So I think for this year, I think we have, as I said, focusing more on value and not really on volume. I think as we go down the next quarter or two, I think we'll come back with what is the plans for the way forward in terms of member additions.
Can you quantify this premiumization that you're talking about? Currently, as a percentage of your mix, what is it? As you're saying, it's increasing. So in value terms, you do better and it'll offset some part of this lower addition that we're seeing. So what is it? I mean, what was it? What is it? Where is it headed?
So currently our average unit realization, or AUR as we call it, is 5.04 lakhs, which is up 28% compared to last year same quarter. So that's the end result of all the activities we have done in terms of eliminating, changing the mix towards longer tenure products, looking at more premium products to be sold into the same markets.
Manoj, as a percentage of the total mix, what is it? I mean, premium customers as a percentage, which is helping you reach this 5.04. So is it 50%, 60%, 70%? What is it?
So we measure it by tenure. Longer tenure products are 63% today.
63%.
Yeah.
And it was earlier, how much was it? And where is it headed?
I think it is. It was up about 2%. So compared to the same quarter last year. So the increase is not so much material, but I think what we have done in terms of looking at markets, looking at giving consumer offers, all of that, a mix of activities we have changed. That's what's causing the premiumization.
Okay, all right. Thanks a lot, Manoj, for joining in. You're sounding quite optimistic about business. I'll tell you what, I have a family of 4 and we're always looking for holidays. And, so that's any long weekend, we try to rush out there. So I guess that's a change that we've seen in the last couple of years. Wishing you a good day ahead. Well, before we get to the market opening, Prashant has hopped across to the big ball to tell us about an interesting data point. Prashant, take it away.
I mean, it's just sort of dates, nothing else. But I think the dates are also important. And, it's going to be a November to remember, no less, because you got really large events lined up over the next 10 days or so, which I think will dominate markets and what they do. There is, of course, the earnings season here, which is underway, but these are large sort of macro-ish overlays for the market to deal with. Let's actually put the data up. This is what I'm talking about. You've got the US jobs data, which comes through on the 1st of November, right? And this is the last jobs data before the election. And, voters will have an idea about how the US economy is doing. And, of course, it's the last jobs data before the Fed decision as well. Already lots of debate about whether, the US economy is slowing as needed or it is not. I mean, some estimates say that US GDP is growing at about 3.5%, tracking 3.5% annual growth, an economy that size. So I think that's the first number. Then you get into the China NPC, National People's Congress, where the dates just came 2 days back. The firm dates came 2 days back. And there is lots of talk that they've kept these dates between 4th and 8th deliberately. The reason is US election day, which is 5th of November. Now, typically by that night, the night of 5th of November, who's actually going to be in the White House is largely clear, unless and until it's a contested election. People demand recounts and it goes into a bit of a loopy-loop. So the talk really is that depending on who comes, say, for example, if it is Trump, who we know by late evening on the 5th of November is going to be in the White House for the next 4 years, the Chinese want the flexibility in the NPC via the NPC to announce a much larger stimulus, because if it is Trump in the White House, I mean, he's a tariff guy, and the country that he wants to tariff most is really China. So, you know, they want the flexibility to be able to react to who's there in the White House on the 5th of November, sort of assuming that we know clearly who is the winner. So there is the China NPC and US election day, which actually are sort of coinciding. Then, of course, we get into the Fed decision, which is on the 7th of November. Remember, the bar for not doing anything. The first hike was a large 150 basis points, but after that, we've seen bond yields since that date, which have moved up about 50, 60 odd basis points. So what is the bond market saying? Is the bond market saying that, well, you don't need rate cuts at this stage? Was that the first and the deepest and the largest that we've seen? Will we get a 25 as the markets are penciling in? Those are going to be important as well. And that's the reason why this entire setup makes it, as I called it, a November to remember. Back to you.
Listening to you, Prashant, I also realized November 5 is, of course, when the US election gets done.
Yeah.
It's also Guy Fawkes Day, by the way, for those who know Great Britain's history. Commemoration of, that foiled plot where Guy Fawkes, who's a big character, was trying to blow up the House of Lords in the Parliament and kill King James I. I remember because I went to a British school for a bit. So, 5th of November.
November.
November
5th is Ekta Batra's birthday.
Oh, that too. So it's a big day then.
I mean, you're long enough.
All right. So with the calendar firmly in place, let's get back to the here and now. And in the pre-open, now we've got very, very flat cues coming in. Sensex Nifty absolutely flat, not doing much. But the Bank Nifty could continue its good show from yesterday, its forward march from yesterday. Let's go back to our technical experts. Mitesh and Sudarshan are back with us. Sudarshan, so what's the call? 910?
Well, consider buying Uber or Reality with a stop under 1900.
Okay, and Mitesh, which stock will you go with?
I think I'll choose Aarti Industries after a long decline. It's reversing. So buy here with the stop at 503 for targets of around 527.30 on the upside.
Okay, got it, gentlemen. Thanks very much. By the way, just putting it on the radar out there, watch out for NTPC as well today. The stock in the pre-open is up about 1.5%, 2%. SEBI has given the green light to the renewables IPO, so it moves one step forward. And obviously, that's something that the market has been excited about. Let's quickly go ahead and talk to Abhishek about Federal Bank, which came out with a good set of numbers. Abhishek.
When Federal Bank came out with good set of numbers, overall it was a good quarter for them. Net interest margin has come a bit under pressure, 4 basis point decline over there. So hence it has come in at 17 quarter low of 3.12% versus 3.16% in the previous quarter. However, asset quality is one of the best that you are seeing in last 9 or 10 years. So gross NPA ratio, as per my sheet, is at 37 quarter low of 2.09% versus 2.1% in the previous quarter. Slippages have remained steady. Slippages have been at 434 crore versus 424 crore in the previous quarter. So annualized slippage ratio is at 15 quarter low of 0.75% versus 0.77% in the previous quarter. One of the lowest slippage ratio amongst our banks. So operating profit growth of 18.2% YOY is perhaps one of the best that you are seeing in last 5 quarters. The NI was slightly below our poll. However, the PAT has been above our poll. Back to you.
Okay. All right, Abhishek, got it. So Federal Bank definitely on our radar. As will be the Bharti twins, Bharti Airtel and Hexacom. Both will be reacting to earnings. Let's go back to Rima for a quick wrap-up. Rima.
Thanks so much for that. So both Bharti Airtel and Hexacom have reported a strong quarter, and this is driven by the tariff hikes undertaken in early July. So operationally, the numbers are bang in line with street expectations and very strong. So first, starting with Bharti Airtel, the company reported a consolidated revenue growth of 7.7% on a quarter-on-quarter basis, driven by a 10% jump in the India mobile business, which is about 60% of the company's top line. Margins too expanded, but profits have come under pressure on account of an exceptional loss. Also comparing Bharti Airtel with Reliance Jio, Vodafone Idea is yet to report their numbers. You would see that Bharti Airtel's performance on ARPUs, which went up by 10.5%, and even the subscriber loss is limited to 2.9 million subscribers on a quarter-on-quarter basis, less than Reliance Jio. And also what you can infer from the subscriber loss is that it appears to be more of the low-end ARPU customers who may have opted out of the Airtel network because the 4G subscriber base for Bharti Airtel went up. Excuse me. Bharti Hexacom too reported a good set of numbers. Revenue growth of about 10% quarter-on-quarter, 20% on a year-on-year basis. Margins are now at 49.9%. Again, ARPUs for the company jumped up to levels of 228, 11.5% increase. Here again, profits are down sequentially because in Q1, that's the prior quarter, there was an exceptional gain. Back to you.
Okay, all right, got that. So we'll keep those stocks on the radar as well. Rima, thanks very much. Okay, just about a minute to go before we start getting the rates. In the pre-open, just to recap, some of the gainers include a few pharma names as well, actually. Sun Pharma and Dr. Reddy's are up and about. There's NTPC, like I mentioned, and ICICI Bank. These are some of the early movers on the green side.
And Infosys has gone ex-dividend. That's the reason why it's lower.
Okay.
So important to note that as well. But plenty of movers in the broader markets. We have a few stocks that are reacting to numbers as well. So, Prashant, let's get straight to the action.
Well, it's absolutely flat for now, and that's how the indices will start, and then we'll look at some of the specific stocks and what's happening. So, what do you have? 24,370 on the Nifty. Bank Nifty is starting about 1/3% higher. The sensex is flattish. The mid-cap index is up 0.5% higher. So, you got the broader market, which I think are outperforming what the Nifty and the banks are doing at this stage. So on your screen, so it's a very, very quiet day. 2:1 is the advances are outnumbering declines, but this is just straight first 30 seconds of market open. The Nifty heat map should appear and come into view, and that will give you a sense. It's more down than up. And we've got 35 odd names, more than 35 names, which are starting the day lower. And you got a minority, which is in the green. So 36 points lower is what you have. Yesterday, of course, was nice because across the board, all indices, you had a 1% rebound after about an 8-9% sell-off from the all-time highs. Nifty, mid-cap, small-cap, everything saw 1%. Nice, neat kind of a move. So we're starting about 40 points lower. Surabhi.
We have another results casualty, and we had Abhishek calling this out earlier. So today's BFSI result casualty is Spandana Spurti. Stock is down 10%. So let's just put that one on the board before we start talking about the large cap moves. You can get Spandana Spurti on the screen, down 10%. Again, asset quality issues really scaring and spooking the market. Anyway, back to the larger names. NTPC, like I said, is the best performing stock on the Nifty with excitement around the renewables IPO. SEBI's given its approval. ICICI Bank is continuing to attract buyers, 1% higher. There's a Coal India that's up about 1% as well. Dr. Reddy's and we have BEL, some positive gains coming through over there. SBI. So basically, the market seems to be rallying behind banks where the asset quality issues are not that significant. On the downside, Infosys, as Nigel pointed out, it's gone ex-dividend today. There's actually selling on Bharti Airtel, despite good performance. Perhaps the stock's already done its move. 1.5% down on Bharti Airtel, as we can see it right now. Some more selling on Reliance. That's the big one that's keeping a lid on the gains today. And then you have a whole host of consumer stocks. Auto as well as regular FMCG names like Lever are on the downside. In auto, I can see Hero Moto, Bajaj Auto, Tata Motors. Plenty of selling going on over here. M&M is down 1.5%. Bharti Airtel is now down 1.5%. So yeah, it's a quick 70 points down move.
Well, that's right. And quite a few stocks actually are moving around. Should be from the broader markets. Gillette, I think, is flying away. That stock is up close to around 6%, I think, the last time I checked. And the volume's fairly decent for this counter. Gillette is the stock that I'm talking about. Genesis is another one that came out with their set of numbers. And those numbers look quite good. Operational performance was steady. Top line big growth is what we saw out there. So that stock as well should come up for you. Gillette is now up more than 10%. So both these two names doing quite well. Syrma yesterday put on some weight. The management sounded very optimistic when they joined us on the show. And today it's up another 4%. So good going on that one. DCX Systems, they won an order. So that stock, in fact, has moved up as well. I think it's up 5%. It's in that 5% band. It's seen a sharp correction from the recent peak. But DCX has moved up. A few more result reactions. JSW Infra, IGL, both of them, those numbers actually appear a little bit tepid. But both those two stocks, JSW Infra is the one we're talking about. JSW Infra as well as IGL, both of them have opened up higher. So it appears bulk of those weak numbers were already in the price. And that's why these stocks are surging 4 to 4.5% in trade. Suzlon on the street is taking into cognizance that the second half of the year will be much better. And that's why, in fact, that stock as well is holding in the green. What's not doing well? Take a look at Senco. The stock is down close to 12% as we speak. Big downtake is what we're seeing out there. Idea Forge is another stock that's down 8.5% now. So big selling is what we're seeing out there. Plenty of excitement ahead of that IPO, but that one's getting clobbered. And IFB Industries, the second day running, their stock is down more than 10% in the initial take. So there are quite a few big accidents actually from the broader markets. IFB, Senco, Spandana Spurti, Idea Forge, all of them getting clobbered in trade.
I mean, they got some large moves, and we'll sort of focus on more as we go along. But you got about 1/3% cut coming through, about a 55 odd point lower start. Krishna Sangvi is with us. He's Chief Investment Officer Equities at Mahindra Manulife Investment Management. Krishna, good to have you with us here as always in the studios. Happy Dhanteras from all of us here. Appreciate it. So just your own take and analysis of this, of the earnings season so far, and tied in with what we're seeing in Q3, starting October, and whether what you're seeing and picking up from analysts and people you speak with, is there a bit of a slowdown underway? What's your sense?
So let's look at results, into three buckets. One is the BFSI as a aggregate, one is commodity space, which is metals, oil and gas, cement, and the third is the all other industry, which are essentially the consumers industry of those first two. I think BFSI is doing pretty good. You look at aggregate numbers, they're still leading the show. Consumer industries across is also doing well. The earning challenge on a aggregate is being driven by the issues on the commodity space, which had a bad quarter. So I think overall, yeah, we are more or less in that mid-single digit kind of earning growth, which is partly expected. But yeah, for some of these companies, the individual companies might have been a bit weaker than expected. But aggregate number is pretty much in that, mid-single digit kind of growth profile. And let's face it, we still get to see at least 50% of companies, to report in the next 2-3 weeks. So might get a better picture there.
What about Q3 this quarter? Is it turning out to be slower? I mean, it's just assessments from the ground, but a lot of heavy lifting has to be done in Q3 for H2, and then for the full year to come up to a more respectable number. Yeah, and that has not been happening. Is the pet peeve for many.
Yeah, so I think the early season indication from the festive season has not been as good as what was expected. Partly is a challenge of expectations being good, and partly, absolute number are still acceptable, still good. But yeah, heavy lifting to maintain the FY25 earning growth rate clearly falls on H2. We might see a little bit of a, earning downgrade post the result season, and hopefully that should not be as bad. But clearly, currently the views are slightly different on the earnings season, for Q3. And there's a macro challenge, on this, some of these consumption related things which we see. Is it an issue where for almost every category there are quite a few new entrants in the market? So the existing set of companies are possibly, not able to gain as much because somebody else is gaining market share. So if this hypothesis is right, the underlying consumption is not as bad. But there are some companies in unlisted space which are possibly gaining, or some other competitor which is listed, but as a new initiative they're doing. So that's one way to look at it, and then overall consumption doesn't look good, and that's where you take the macro reconciliation, saying that if India is still going to grow at 7% real GDP kind of range, then it's not that bad, maybe it impacts some industries, some existing players in a more meaningful way, but aggregate picture for the economy is not so bad.
And I guess on consumption, we've been discussing this with lots of analysts as well, right, guys? I mean, if you're taking a fancy holiday, you're buying gold jewelry, and you also bought a car last year, at some place you have to cut corners, right? I mean, there's education, inflation, etc. And I think Avnish made that point as well, that there is a lot of urban inflation that perhaps doesn't get tracked exactly in that CPI number that we look at.
It's not 5, 6, 7%.
It's definitely not 5, 6, 7%. So if you're spending, you can't be spending 10 places at the same time. You will cut back somewhere. And I think maybe that's what's beginning to show up in consumer demands. But Krishna, having said what you just said, the earnings discussion that we just had, I'm just trying to think, what is it that will take this market back to 26,000 plus, 27,000 plus? Either you have to have a very strong earnings revival in the second half, which is not what you just described, which is not what we're discussing, or you have to have that money train, that wall of liquidity hitting the market again, which is where we are, discussing this whole FPI situation, going out, and who knows whether they come back in. There's no point trying to second guess that, but do share your views there. But I'm just trying to understand whether this market, what can take it back to new all-time highs, or whether now investors have to get used to the idea of just being in a bit of a listless, range-bound market with low returns for the next 6 months.
Yeah, sure. So, as you said clearly, who knows is the best answer, right? So what can happen? Let's put it this way. We got maybe one sharp month of very negative outflows on FII's front, which is perhaps maybe highest in the last history of whatever we can remember. So to that extent, if you adjust for that, the kind of drawdowns in the markets are not as severe because you got nearly $11-12 billion worth of outflow in a single month. So to that extent, the drawdowns are far more acceptable is one way to look at it. Yeah, come from the expectation side. Let's look at what drives markets, right? So one is the economy, which we just broadly discussed. 7% is honestly not too bad. Even 6.87 range is acceptable. Second is earnings, mid-single digit, more or less reflecting little bit slowdown. But if you sectorally dissect, some sectors are still doing good, some are weak. So again, it edges out. Third is the expectation game, because if you are expecting much higher earning, that's why partly the disappointments comes in. And that's where the challenge, the second part of expectation challenge is the investor return profile. We've got a fantastic last 18 months odd period where almost any and every stock would have given you very meaningful return profile. Maybe multipliers, multi-baggers happened. So to that extent, there's some sort of a moderating the expectations of a low return, maybe no return kind of profile for some months is part of them. That's where your long-term averaging, long-term compounding of economy and earnings and markets play out. If you look at last 15-20 years, you got what, 13% odd earning growth, maybe 14% odd market growth.
Is that what you're expecting?
Yeah.
That we will be in a no return or a low return market for the next couple of months? Is that a assessment, a view that you have right now?
Who knows is the best answer, because if you don't have this $11 billion worth of outflow in last, for whatever results we've seen in this last 3 weeks, but it was not accompanied by a $10-11 billion, $12 billion outflow, then also who knows, what would have been the market reaction, because honestly, the demand-supply side of markets also matters. Where you discuss demand-supply and economy, but even from a market side, that matters.
Hi, Krishna. Good to have you in the studio today. I recall the last time we chatted, you were a little bit cautious on the broader markets. You were saying it's getting a little too fast, too furious. And also, I think you mentioned that the railways and defense space, a lot of the good news was in the price. And from there, both those two sectors have seen a bit of a correction. But you were positive on FMCG. And I think consumer staples is something that you liked. How are you approaching things right now? What do you make of the sound bites that are coming in there, the earnings as well?
Sure. So I think consumption as a space, maybe consumer staples and aggregate other consumer space. I think those, let's look at 3-4 broad picture. One picture is there a market share loss because some new players are entering? And to that extent, it's not really bad for the consumption as a space. Maybe some stocks might be impacted. Second bigger trend in India is, we're moving far more into a digital formal world where efficiency gains are playing out across companies. So what really happens is that when efficiency gains are playing, your working capital cycle goes for a reduction. So your end customer sales remaining same, which is, consumption does not change, but the primary sales start impacting because the channel inventory needs to come down. So that can be one way to analyze, a little bit of a slowdown at the primary sales level need not really hurt the consumption. And the third part really is, again, a little bit more macro to analyze is that what we're seeing in India is, reasonably good, again, efficiency, productivity gains on the macro of fiscal deficit improving, post GST implementation, post, entire digital integration of income tax, etc. We've seen tax compliance going up. So while government finances are improving, very fact we're discussing tax compliance going up means somebody somewhere who was not paying tax is now being forced to pay. Yeah. And to an extent, unpaid tax of past was a consumption power for those set of people. And now that they're paying tax, perhaps, that consumption power is, impacting their, incremental behavior. And, sometime back, we just, you just mentioned, right, that if somebody has spent on a luxury last year or a high-end discretionary product last year, he or she is not likely to repeat very next year. So to an extent, some of these products, very fact they are 3-5 year, replacement cycle products. Mm-hmm. You may not buy it all over again. So it is a combination, I think, on all these fronts, which possibly says, okay, consumption is possibly weak from a market perspective, but underlying consumption is still acceptable.
Just want to put up a few names which are moving. Vari Energy is up, is the biggest volume-led gainer right now. It's up 3.5%. So 24.19 on Vari coming through. Federal Bank is up 6.5%. So 197 there. Piramal Pharma has got about a 5% pop, 258. And Sirma, we had the management with us yesterday. And Sirma saw a very large move yesterday. It's another 8% higher this morning. JSW Infrastructure is another 3.5% mover, so almost 300 rupees. There's Capacide Infra, which is up 11%, 383 on Capacide. Home First is up about 5.5%, 1161 on Home First. So there is Sharda Cropchem, which is up 4.5%. Kirloskar Brothers is up about 4%, all decent volumes. Viatech Vabag is back up about 4% or so, and so on and so forth. You know, look at KPIT Tech. KPIT Tech is down about 3.5%. Numbers, of course, were slightly disappointing for KPIT Tech. In a way, the company that we're going to be speaking with in just a bit, Tata Tech, in largely the same space. Tata Tech is not moving, but Tata Tech has been since it IPO'd, it's been a underperformer. So it never really saw the big gains that names like Tata Tech, etc., or Cyient, etc., saw. But that one is also down about 3% at this stage. Krishna, any thoughts on names like? My question is about Vari, but since we can't talk about stocks, but companies in the renewable new energy space, right, where you've got China, which is a very large player. Tariffs play a meaningful role in terms of protecting competitive positioning. How should investors view these things? Because those could, while the focus is on promoting the domestic industry, but we've seen with solar glass, for example, a few quarters back, a company was impacted quite severely when tariffs were not put back on like they were expected to. So it's dependent on tax rates and those kind of things as well. How would you look at these businesses?
Again, a macro trend, we see an increasing trend of companies or sectors, where some sort of tariff barrier, some sort of import protection is, playing a role in determining the profitability. That's true, especially when the competitor is China as a, underlying. Similar in the renewable energy space, yes. Definitely, these tariffs are creating some sort of a support system on earnings. But if you step back and look at a slightly longer picture, yeah, clearly the amount of demand India is expecting for ourselves on the solar power capacity creation, plus the way world is moving into energy transition, combination says that aggregate demand is in place. Yes, clearly the price protection or the tariff barrier does give a superlative profit performance for some companies at some point of time. But we also have to be watchful of what those companies are doing with those profits. If they are investing into some sort of a backward integration to get into better technology angle, possibly those, end benefits are going to be far better for them. But clearly, the renewable space is interesting, and yeah, tariff are possibly a way right now which determines profitability for too many players across industries.
By the way, just looking at some of the calls that came in on Bharti Airtel as well, the stock is down about 2.5% despite putting on a really solid show with a 10.5% improvement in ARPU. The ARPU number of Bharti Airtel is tracking at 233, which is significantly higher than Jio. Jio is just under the 200 mark. But the stock is cooling off. Let's pull up a one-year chart on Bharti. One, of course, could be market positioning, and then there's so much of FPI selling, and this is one of the key index stocks, so that could be weighing. And then this explains it. The chart kind of explains the trajectory because you've had so much of a huge move already. And the trigger now needs to be the next round of tariff hikes. Can they do one more? That's really going to be the talking point. So you have some calls. UBS's target price is 1595, which is lower than where we are. Citi is very optimistic. They have a buy 1950. That is where they are. So some calls on Bharti coming in. The other stock of the morning, really, on the positive side in terms of perhaps the best result reaction that we're getting is, yes, Gillette, as Nigel has been indicating. We'll talk about Gillette as well. But the one that right now we have on our radar is going to be Federal Bank. Nigel will tell you more about the shaving. But right now we have Abhishek joining in on Federal Bank because, again, in a sea of worries about asset quality, Federal Bank has been just pristine. It stood its ground. And, the market is really rewarding it for that. So, Abhishek, let's go over the numbers again.
Well, to begin with, it was Shyam Srinivasan's last quarter and first quarter of the new management as well. They have reported a steady set of numbers. The net interest margin has declined by 4 basis points sequentially, but that's in line with what peers have been reporting as well. 3.12% net interest margin over 3.16% in the previous quarter. The asset quality is one of the best that you are seeing in last 9 or 10 years. Gross NPA ratio is at 37 quarter low of about 2.09% versus 2.11% sequentially. Slippages have remained stable, so they have been able to improve their annualized slippage ratio, which has come in at 15 quarter low of 0.75% versus 0.77% in the previous quarter. One of the lowest slippage ratio that you are seeing in this quarter amongst large and mid-sized banks. So operating profit growth of 18.2% YOY is perhaps one of the best that you are seeing in last 5 quarters. Sequential growth is about 4.3% in operating profit. They missed our poll on NII by just about ₹10 crore. However, they beat our poll with respect to PAT by 6 to 7%. Back to you.
All right. Abhishek, thank you very much for that. So that's Federal Bank, and you'll hear from the management of Federal Bank at 10:15 later on the program. Krishna, thank you very much for joining us here in our studios. Appreciate it very much. Thank you. Thanks very much. We'll take a quick commercial break here. You'll hear from the management of Tata Technologies in a bit. We'll also have the management of Punjab National Bank join in on the other side. Stay tuned.
Welcome back. So as promised, let's straight away get the conversation going with the management of Tata Technologies. The company came out with a modest revenue performance for the second quarter. Margins were steady. The question is whether the immediate future is looking a little more challenging, because there was some commentary to that effect in the conference call that took place. Let's pull up a one-year chart on Tata Tech as well. I mean, since the listing, the stock's actually down about 23%, maybe reflecting some of these wider concerns on the automotive side. Just to recap, quarter on quarter, the revenue improvement is 1.6%. The EBITDA margin is steady at 18.2%. We have with us, I think, the management now joining in. Mr. Warren Kevin Harris of Tata Technologies is with us. Mr. Harris, thanks for joining in. So let's start with that very cautious commentary where you're talking about delay in decision making. You're attributing it to a lot of factors, the US election being one. But I want to start by focusing on what the OEMs are saying. A lot of auto OEMs in Europe have already cut their guidance. They're sounding extremely bleak on the immediate sales forecast. What's happening?
Yeah, I think we've seen somewhat of a tapering of electric vehicle demand, both in the US and in the European Union. I think that the drivers for the tapering are somewhat different. I think the US is primarily driven by the uncertainty in and around the election. I think the choice for the electorate represent relatively polarized positions as far as the incentives for electric vehicles, and I think most of the OEMs are really waiting for clarity before decisions are made there. I think in the European Union, I think the challenge and the competition from China specifically is something that is prompting some of our customers to pause. But in both of these situations, we expect clarity to present itself as we move towards the end of the year. So the headwinds that I referenced in the earnings call are something that we expect to be relatively tactical. And despite the market conditions, I also signaled that I expect H2 to be better than H1, which reinforces our confidence around the momentum that we have with the business.
But, I take your point on U.S. election uncertainties and what policy will mean for EVs. But more specifically on Europe and all the guidance cuts that we've seen over here, is there a real threat of EV demand tapering off? And could this be more structural in nature rather than just a one-quarter phenomena?
I really don't think so. I think if you look at the guidance that is being provided, 1 in 5 cars come 2030 is expected to be electrified in the European Union and the United States. In China, we're expecting more than 50% of vehicles to be electrified. So I think the long-term direction for the market is relatively defined. But I think in Europe, I think the OEMs are looking for some form of regulatory protection. And again, in the US, I think we're just looking for clarity in terms of what the new administration will adopt in terms of policy.
All right, Kevin, good to see you. Prashant here, but it's a short conversation. Thank you very much for joining us, and really appreciate it, and hope that things are better going forward. Speak with you soon again. PNB is the next management joining us on the phone. Asset quality witnessed an improvement, but margins came in softish. Atul Kumar Goyal is MD and CEO at the bank. He's joining us now. Mr. Goyal, good morning. Thank you for your time. Happy Dhanteras to you, sir, to your team, from everyone of us here at CNBC-TV18. Fabulous performance, Mr. Goyal, especially on slippages, incremental slippages, recoveries, credit costs. What's happening? I mean, it looks like a lot of the financials are going one way and you're going the other. It's almost as if you're operating in a different market. Tell us, what's the backdrop and what's the background to this?
Yeah, very good morning, Prashantji, and happy Dhanteras to you and all your viewers also. So you are very much right. If you see the quarter by quarter, not only for this quarter, every quarter performance of the PNB has increased to manifold in all the parameters, whether it is a NII, whether it is a operating profit, whether it is a net profit, but focus is on the recovery. Focus in the recovery. Every quarter slippage is being reduced and recovery is increasing. So now we have reached such a situation that recovery is at least 2 times of the slippage also. This is the reason our credit cost, which used to be around 0.32 in the first quarter, has reduced to only 8 basis points. And we are further revising our guidance. Last time we have told that 50 basis points will be the whole of the year. Now we are further revising 25 to 30 basis points because aging requirement has reduced drastically. 97% is the PCR.
Right. Mr. Goyal, can this continue is the question? Or will the system, a little bit of stress, especially in specific segments, catch up with PNB as well? I mean, you are one of the largest banks out there with exposure to pretty much all segments.
Prashantji, definitely it will remain there. There is a 2 point. First is the fresh slippage, because I will give one data, which is the data of the last 51 months, how the new underwriting is doing. The more than 9 trillion we have sanctioned, 8.20 trillion we have disbursed, and outstanding 6.19 trillion. Which is 60% of my total book. And this is hardly 2,300 plus is the gross NPA, which is 0.29%. This is on the underwriting part. Slippage will not be very less. The another thing, the recovery also. Recovery as on date is 93,000 crore TW book is available. And 47,000 is the gross NPA. So 1.40 trillion, it is a gold mine for the Punjab National Bank as far as the recovery is concerned. So this will definitely remain continuing.
Okay, good morning, Mr. Goyal. So just to finish that point, what are your recovery targets for the full year?
Full year, Madam Lata, good morning, is 18,000 crore rupees. And if you see, 4,800 for the second quarter, 3,200, so 8,000 we have already recovered. So we are confident we will be in a position to recover 18,000 crore rupees, which was the target for the whole of the year.
Okay. Now let me come to another point about PNB, which has rankled me for many years. I'm not just holding it against you. You look at your deposits. It is 14.5 trillion rupees and your advances is 10.2 trillion. ICICI is a little less than you, 14 trillion in terms of deposits, but advances is 12.7, good 2 trillion rupees more. Let me take another public sector bank, which is very close to you. 13.6 trillion Bank of Baroda's deposits. But the loans they have given is 11.4. You have not given about 0.4 trillion of loans which you can give. What I mean is that you have a lot more headroom to give loans, why is PNB so much lower in advances?
A little bit I agree with you. If you see the growth in the deposit, we have given the guide 12.80% and focus on the retail side, RAM side, retail, agri and the MSME. If you see retail, there is an increase of around 14%. Even in the home segment, there is an increase of around 19%. And vehicle may it is 25%. So madam, what I want to say to you, because if you see 2 years back, the quarterly increment business only 11,000 crore rupees. Now if you see, we have reached such a situation, more than 80,000, 85,000 crore rupees, we are total increase in the business. So whatever you are saying, there will be a further increase in the advances in times to come.
Okay. No, this is a historical issue with PNB. I always notice that you are the third largest bank when it comes to deposits. But when it comes to advances, you go 5th or 6th in the rank, which is a bit of a quandary that you are not lending as much as you can. The other question I had is with, your SMA2 has gone up. So should we, not much, but it has gone up compared to the previous quarter. So should we expect that you may see an increase in bad loans, in slippages?
No. Two things I will give, madam. First is the SMA number. If you see the 5 crore and above, it is SMA2 is hardly only 2,125. So whatever you are saying, right. SMA2 little bit has increased. It was 12,000 crore rupees in the last quarter. It is 13,000 crore rupees. So this is only 1 or 2 accounts. Otherwise, there is no stress in the books of the Punjab National Bank.
Okay. What's the percentage of unsecured loans you all give? And is there any sense of stress there?
No stress, only 27,000 crore rupees plus is the retail unsecured loan. Maybe the corporate, there is no issue, 27,000 crore rupees. And at the time of the launching this product, out of which 1,000 crore for the credit card, 4,000 for the education, 4,500 pension there is no issue, we are recovering. 18,000 crore hardly for the personal loan. So at the time of, we have estimated 2%. So it is within that limit only. So no issue for the Punjab National Bank as far as unsecured retail lending is concerned.
Okay. What about the cost of funds? Your domestic NIM has come down a bit. Not a great deal, but from 3.11, your net interest margin has come down to 2.99. So a 12 basis point fall. Will you say the cost of deposits has peaked? Can we expect you to go above the 3%, go closer to the 3.2% mark by the year end?
Actually, in my opinion, definitely deposit rate has reached to the peak. But as far as our guidance for the NIM is concerned, so last quarter, even in the beginning of the year also, we have given the guidance 2.9 to 3. And we will maintain that. But absolute number, if you see the net interest income is increasing quarter by quarter. So that is not a challenge for us, because the reason is you see the assets quality, which type of loan we are giving. So there is a lot of competition for the AAA and AA rated account, because they are having the other avenues. They can raise the fund from the market by loan at a very cheaper rate as compared to the rate of interest being charged by the bank. This is the reason.
लेकिन आपको एक बड़ा एडवांटेज है ना, यू डोंट हैव टू पे अ लॉट ऑफ मनी फॉर डिपॉजिट्स बिकॉज यू हैव अ लॉट ऑफ डिपॉजिट्स. आपको रेज करने ही नहीं पड़ेंगे. So you know, it is easier for you to increase your margins because you can control the cost of raw material. You have plenty of raw material. You are overflowing with money.
We are giving more through the CASA also. We are giving more through the CASA. We are having 10,000 branches, 20 crore customers. We have provided tab to each and every branch. Yeah.
Okay, so your guidance is for a 3.1% for the end of the year?
Yeah, 2.9 to 3. 2.9 to 3, but absolute number. Okay. But absolute number, that is income will increase quarter by quarter.
Okay. Now, in a quarter, maybe this quarter or maybe next quarter, Reserve Bank will tell us what is the provisioning you have to make for infrastructure, which is, going towards 5% for new loans. Yes. And even for some historical loans, you may have to provide more. How will it change your balance sheet?
It will not have the much impact, because 60,000 crore rupees is the project book, out of which 20,000 is under implementation. If we will take 5%, so there will be impact of only 1,000 crore rupees, and the time will be available for making this provision. So considering the strength of the balance sheet, I do not find there will be any challenge for making any additional provision for the Punjab National Bank.
Okay. And LDR तो असर ही नहीं होगा आपके ऊपर ना, because your loan deposit ratio is, I think, what, 140%? Yeah. Is it 140?
Yeah, that is very good. Yeah.
Okay. So you won't have to invest more in government securities, even if the new LDR rules come.
Yeah, yeah.
All right. Many congratulations, Mr. Goel. Thank you very much indeed for joining us.
Thank you very much.
Interesting conversation, Lada. Thank you very much for joining us. And Goelji, appreciate you coming on and talking to us here on CNBC TV18.
Thank you very much.
Thanks very much, and happy Dhanteras and festive greetings to you and your team. Appreciate it. I think markets are down. I mean, look at the market go, right? I mean, 140 points down. We're at about 24,196. So we've taken a bit of a dive here, and not fully, but almost fully, 3/4 of the way, giving back the 1% pop that we saw yesterday. But I think we have the LIC Housing Management with us, guys.
All right. Well, let's get straight to that then. LIC Housing Finance, that's the next management on the show. The net profit rose, the asset quality improved as well. To help us out with what went on in the past quarter, the way ahead, Mr. Adhikari, the MD and CEO of LIC Housing Finance, joins us on the show. Hi, sir. Good morning, and thanks a lot for joining in. Let's get a couple of numbers out of the way. What kind of an AUM growth are you looking at for the year? And also, if you could help us out with the NIMs. Past quarter, I think it was around 2.7%, but yields came down a little bit, though the cost of borrowing as well did soften a little bit. Mr. Adhikari? Okay, all right. I think we have that line that's frozen actually, but we'll just get back to that. The last quarter, the NIMs actually came down on a year-on-year basis as well. It was down from around 3% to around 2.7% odd. Though the AUM for the past quarter was up close to around 6% on a year-on-year basis and close to around 2.5% on a quarter-to-quarter basis. We'll try to get Mr. Adhikari back. But for the time being, as Prashant mentioned, well, the markets are calling for attention. Down 120 points. The good news, though, is that the Nifty Bank, that's trying to make its way to around the 20 DMA, which comes in at around the 51,580 odd mark. So that's holding one end up. But otherwise, the breadth of the market as well, that started off with close to around 1,800 stocks advancing, that's come down to around 1,200 stocks or thereabouts.
Just a few specific names I want to take you through. New. This is new in the mix. I mean, not in the morning when we looked at markets and stocks. Sterling Wilson Solar is down 2.5%. It's got decent-sized volumes. HDFC AMC should come up on your screen. It's around 3% right now. There's KSB. I think this KSB pumps 5.5%, 6% cut. Very large volumes for this point in the day. It doesn't usually show up with this much traded volume. Poonawalla FinCorp had a it made the day's low sharply lower yesterday and then spent the rest of the day recovering. But Poonawalla is down 3.5%, 4% as well. If you can have the intraday up, they'll tell you. Cipla is down 2%, 1461. So these are all kind of newish names. Bandhan by close yesterday was up, was up 10, 11%. That is giving back about 2% or so right now. The others, I think we took a look at. Bharti, IOC, Ferso, Senco, KPIT. These are all, of course, down anything between 2 and 7.5% guys.
Just some more names on the green side. Sirma is looking really amazing. I mean, Sirma, we caught up with the earnings in the management yesterday. Look at the move, 9.5% right now as they continue to sound fairly optimistic. There's Piramal Pharma, 5.5% on the upside. And the reaction on IGL is worth noting. IGL came out with sluggish margins and operating performance. But hey, I mean, look at the collapse in the stock. With the whole sort of worries around lower gas allocation, APM gas allocation, the stock has just completely, been decimated in the last 2-3 weeks. So therefore, there's a bit of a, let's buy at lower levels, that kind of a thought process that seems to be going on.
Just to name a few more stocks from the broader markets, Capacite is up 10%. Gillette, which normally doesn't have very high volumes, that's up another 10%. You have Supriya Life, the stock, I recall, it listed with a lot of fanfare and then it halved from the top. Now it's pulling back. That one as well is up close to around 5% in today's session. Well, let's get Mitesh Thakkar back with us. Mitesh, we're down 110 points. We're holding at around the 24,200 odd mark. What's the way ahead from here on? Would you look to buy into this dip? Or do you believe that we're going to test the earlier lows?
So, Nigel, I think, on the index, I haven't bought a flash. I'm actually hoping that from these levels, we'll see a reversal. And the pivot point for today for me is about 24,170, and we've got it to a low of 24,190. So I think if that holds, there's a good chance of a reversal. But once the half-an-hour charts reverse, maybe you would want to place a long trade. But on the stock side, I'm trading with mixed bias. Both long and short positions have been taken. So, I have one buy and one sell right now. On the stock side, Voltas can be taken as a negative or a sell side kind of a call. Keep a stop at about 1755 here. Look for a target of roughly around 1680 on the downside. And on the buying side is Piramal Enterprises or PEL, which I would recommend buying with a stop just below days low. So around 1062, 63 can be taken as a stop. And a target of 11, 10, 20 can be looked at on the upside.
Mitesh, so just checking again, what are the next levels on Federal Bank that you're looking at?
So I think two results. I think, Bharti and Federal, I think Bharti has clearly turned negative. Federal Bank had the highest closing at 203, which was way back in July 24. But I think that, the stock is showing this time a pattern which could see the stock, which could see the price get past these levels of 203, 204. And once it does that, good chance that we are looking at 220. So very, very positive on Federal Bank.
And, congratulations. Good call on Bharti. Mitesh, have to give it to you, absolutely. Because, at that point in time, we were looking at the numbers. But now it's also become clear there's a slight negative development in terms of Mr. Gopal Vittal. There's a bit of a management transition that's going to take place. But anyway, for now, let's go back and get that conversation going with the management of LIC Housing Finance. We have Tribhuvan Adhikari, MD and CEO of the firm, not joining in. The performance seemed fairly okay, Mr. Adhikari. Let's start by getting your sense on growth going ahead. Your disbursements have been really strong in the second quarter. The AUM growth is about 6% year on year. How are you likely to end the year? What's the full year AUM growth that you're envisaging right now?
Well, the full year AUM growth, as we had guided in the beginning of the year, that we were aiming for, because we have a huge base, we are aiming for a double-digit growth. And we stick by that. So growth by the end of the year should be double digits. Of course, low double digits, not high double digits. And as far as the business environment goes, we've done well, 27% growth sequentially from quarter one to quarter two. So doing okay. And I expect quarter three and quarter four traditionally are good business months for all of us as well as the industry. So going forward, we expect a good growth in business and meeting our guidelines for the AUM
Mr.
targets.
Adhikari, your disbursement is growing very strongly, but AUM is not growing as much. Why would there be so much of a discrepancy? I know disbursals are on a smaller base and AUM is a large base, but it's, at half the rate. Is there something we should take away from this?
No, nothing major. Of course, a bit of the downfall in the portfolio is due to the normal course of business. EMI is getting paid. Yes, there are some prepayments, part and full prepayments also there. And usual, yes, it's a competitive market. So pressure on BTs also. So that's why it's probably the high business growth is not being reflected in a high AUM growth.
Okay, and NIMS under pressure, as Nigel was asking you just before we lost your line. It is under pressure. In year-on-year terms, of course, big pressure, but even quarter-on-quarter, there is pressure. Will it mount? Do you think you go below 2.7?
No, I don't think we'll go below 2.7. Beginning of the year, we had guided for 2.7 to 2.9. 2.73 is where we are right now. Sequentially, our reduction in incremental borrowings have come down slightly. So I think this is the bottom where we have hit, and going forward in Q3 and Q4, you can expect improvement in the NIMs.
Mr. Adhikari, when you gave that guidance, low double-digit growth for the book for this year, are you factoring in any contribution from PM Awas? Just trying to understand, to what extent are you involved with that scheme, and how do you find the latest version of it?
Yes, we are involved in the scheme. Being the biggest HFC, we expect to be largely into the scheme. And in the past, we have done pretty well. PMAY, the earlier versions, we've almost disbursed about 46,000 crores. So when the scheme gets launched and gets up and running, I believe we'll get a good share of that. Yes, that double-digit growth was not completely factored into the PMAY. But yes, some amount of affordable was surely factored in, because we do affordable otherwise also.
Yeah, because that's why I was a little surprised that you're only saying low double digits if you're also sort of taking into account the added boost from PMAY. So then if we put it all together, then would 15% growth be a realistic assumption for this year?
Well, I'd say 12 to 15.
Okay. All right, Mr. Adhikari, we will leave it on that note for this morning. Then thank you very much for joining in. and giving us some sense on the business. That's LIC Housing Finance. Back to the market, 127 points down. So, yeah, 24,200 is in question on the Nifty.
Okay. All right. Well, I think on that note, I think we need to take a snappy break, come back, and we'll continue to focus on markets. We'll have the management of Poly Medicure as well that'll be joining in. Welcome back. Well, let's get straight to Mr. Himanshu Baid, the Managing Director of Poly Medicure, who joins us on the show. Hi, Mr. Baid. Good morning. First of all, happy Dhanteras to you, your family, and the entire team at Poly Medicure as well.
Thank you, Nigel. Well, same to you, everyone.
Let's get to a couple of numbers then. You've reported your half-yearly numbers. And earlier, you were guiding for around 20 to 24% revenue growth with margin improvement of 100 to 150 basis points. Any changes out there?
No, I think if you see the growth pattern, I think we have already done a 23% growth over last year, and we are right on the target. And in terms of margin also, I think we have seen 100 pips over improvement already. If you compare to last year's growth, there is already 150 pips improvement already, which has happened in the margins. So we are absolutely right on track, Nigel.
Okay, all right. Since we are talking about various segments on the top line itself, I think rental business, that was something I think you did 90 crores and you were saying that this year there'll be a big growth out there. So could you tell us the target of that? I think 150 crores is what we were briefly talking about. Cardiology as well, I think you were looking at launching some part of this year towards the end of the year. So could you tell us for FY26, what kind of a revenue contribution will come in, rental and cardiology as well?
So for FY25, we're already seeing a growth of around 50% in the renal business. And hopefully we can continue a similar growth rate in the next year also. Because now products being fully regulated, there is a little bit of, stoppage and imports from China. So I think that, which was kind of disturbing the market at that point of time, now things are kind of settling down a bit. So we're pretty hopeful that we'll grow again even next year around 50%. And on the cardiology side, we have just entered the interventional cardiology business, so which has few catheters right now, which we have entered with. And later on, as time progresses, we will enter into new devices in the same segment. And probably we'll also end up entering into the stents market.
FY26, what kind of a number could you do? Because I think in the next
we haven't
4 to
planned,
5 years, 4 to 5 years, I think, Mr. Baid, you were talking about 300 crores. So that's
yeah, so 4 to 5 years definitely. 4 to 5 years, definitely we are looking at that number because that is the market we are looking at. And once we get more clinical approvals and regulatory approvals for the cardiology products, then the market will have more clarity on that business. But definitely that's the plan going over for next 4 or 5 years. Neither.
Okay. Himanshu, hi, morning. How much of the exports are as a percentage of your overall business revenues?
So export is still 70% right now. We are still at 70% in the first 6 months of the financial year, and domestic is around 30%.
Okay, and you'd want to sort of flip that, I'm assuming, right? Eventually, as a long-term strategy?
Not really, not for the moment, because the export opportunities are pretty big right now. When you look at the China Plus One, and we are very deep now in the European market, and now also entering into the US market. So both these markets offer a high potential. When you look at the global markets, almost 35% of the revenue of medtech comes from US and around 20% odd over comes from European markets. So 50 to 60% is in these two, big markets. So I think we have to be there to be on the top of the board.
So Europe was about one third of your revenues, right? And US was just starting for you. I mean, how much are revenues from US now?
So US, I think this year we would end between 2.5 and 3 million for the moment. It is just a start point. But Europe is doing very well. So still over 1/3 revenue is coming from Europe, right?
If you got an election in the US and the big talking point is tariffs going up, would that be a problem? If they were to go up, I don't know what.
It is a positive for us because there are tariffs going up from China, basically. So that is something which is already happening as we speak, and already some tariffs have been announced on Chinese products. So I think it will be more positive for us because
what about if tariffs go up out of India? I mean, Mr. Trump has said it's going to be matching tariffs. You have 20%. Well, here you go, 20% for you as well, if you want to sell in the US. So
India, the tariffs are very low for medical devices, only 7.5% tariff, 7.5 to 10%. So I think it's not going to impact much. Even if they have a reciprocal tariff, then the tariff is only 7.5 to 10%.
Okay, all right. And talking about the US business, I think for this year is going to be small, right? It's around $2 million, which you see it gradually scaling up.
Yeah.
2 million for this year, right?
Yeah, 2 to 3 million.
And how do you see this number ramping up?
So I think, Nigel, we've already given a guidance that in 3-4 years, we should look at $15 to $20 million. And I think we're waiting for more approvals to come out, for US FDA approvals. As and when these approvals come out, we'll start ramping up the capacities and the business out there.
All right, Mr. Baid, we're going to thank you for that. But the next time around, we're going to quiz you a little bit more on the inorganic opportunities. You raised 1,000 crores, 250 crores was for inorganic. So as you do that, we request you to come back on the channel in the next month or the next quarter and discuss that with us. Thanks a lot for joining in. Wishing you a good festive season ahead.
Thank you. Thank you, everyone. Thank you.
Well, let's take a bit of a break then from the equity markets because Manisha Gupta, who's the star of the day, is Dhanteras. She's joining to tell us what's going on in the commodity markets. Manisha, take it away.
Thank you for that, Nigel. Well, I'm going to talk about gold and silver because this is the all-time high in sense of gold and silver that you are going to be looking at this Dhanteras. So while the international markets have seen a bit of a profit taking, but not too far away from its all-time highs, we have seen gold hit an all-time high of $2,758 an ounce. For the Indian markets, the prices have been at 80,000 rupees per 10 grams, and that's exactly what the price you would be looking at if you were stepping out to buy physical gold today. The 24 carats, that is, add 3% GST to that and some making charges then. So the prices are going to be higher than that 80,000 rupees 10 grams as well. Silver in the international markets is trading at a 12-year highs, but for the Indian markets, it has been a 1 lakh rupees a kg, which is an all-time highs yet again for the Indian markets there. Well, the prices are trading firm, even as we have seen some risk aversion happen there. Well, remember, the Israel-Iran the conflict has taken a bit of a backseat because even as Israel has reiterated, it hasn't done that on oil facilities and nuclear facilities in Iran. And Iran also has not reiterated in a very big way. So at this point in time, it seems a bit of an easing off there. The second thing really is about the treasury yields, which are trading at a 3-month highs. The dollar index, by the way, is headed for the best monthly gain since April 2022. All of these factors would lead to profit taking in precious metals otherwise, but we have seen crude and other metals decline, but not gold and silver even in the markets right now. That is because you have support coming in from the uncertainty in the US presidential elections. It also is about the ongoing geopolitical tensions. And the third thing is the global central bank buying, which has been very strong in gold at record highs in the last 2 years. The institutional investor buying in gold and silver also has been on the stronger side. Never has gold and silver being talked about by institutional markets and also by financial advisors. But this year you have seen that happen as well. I want to take you through some numbers really on what gold prices have been on Dhanteras in last many years. So as you can see, 2019 was at around less than 40,000, and then we've been dabbling between 45 and 55,000 for the last 3 or 4 years. If you look at the Dhanteras prices last year, they were trading at 60,000 per 10 grams, which is 80,000 per 10 grams in this year. So that has been a 20,000 per 10 grams of a jump up. that we've seen in case of gold prices. I also want to show you on what silver is done in sense of imports. India does import 5,000 to 8,000 tons of silver every year. The COVID years were not so great, but in 2022, we saw record imports coming in. And because of those record imports, the next year was slightly on a weaker side. But this year, until the month of October, we've done almost 7,000 tons of silver import as well, with an expectation that you could be looking at record highs this time yet again. A final plate should come in on your screens to tell you on how much gold and silver does India buy during Dhanteras and Diwali. 20 to 25 tons of gold and 5 to 800 tons of silver is bought during this week. So those number is something that we will tally after Diwali is done. But this is the kind of sales India could be looking at.
All right. Manager, thank you very much for that. So gold, silver, absolutely some of the best investments have turned out to be some of the best investments over the last couple of years, especially. Well, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank, so they're Kotak and trailblazing startup founders. This is where the roadmap for India's next 25 years growth and global leadership will be charted. You don't want to miss this.
Welcome back. We continue with our earnings analysis, and we now discuss towards the end of Bazaar the best of the results that have come from the banking arena. Federal Bank reported a good set of Q2 numbers. Asset quality improved or hardly showed any cracks. And this has come along with growth because advances have grown by 19.45%. Joining us now is Venkatraman Venkateshwaran, the Group President and CFO of Federal Bank. Mr. Venkateshwaran, thank you very much for joining us. Well, first up, you'll have managed a very good advances growth. Can you give us some idea as to where the loans went? What was the percentage that went to unsecured loans? Because you don't seem to have any trouble because of that.
Yeah, hi, Lata, good morning. And thank you for having me on the show. To your question on where we have grown on the advances, it's been a broad-based growth like we've seen in the past across business segments, both wholesale and retail. And specifically, if you see by product, the business banking, gold loan, commercial banking, these are the segments which have seen and continue to see a better rate of growth as compared to the rest of the book. Mm-hmm. On unsecured, we still operate at less than 5% of our advances are on unsecured. Though the base is small, that's why you see the growth rate 40, 50, in fact, some of them even 70% growth. That's purely because the base of the unsecured is quite low. Retail unsecured is still 4.6% of the overall advances. So advances growth is, the engine is chugging along quite well, and all businesses are doing quite well.
Okay, what's your expectation? What was your cost of funds? And do you think that it can still inch? I want some guidance on your margins.
Yeah, on margins, Lata, of course, it's driven by both the yield on assets as well as the cost of funds. Now, if you're seeing term deposit costs have been firm, continues to be firm and will continue to be firm in the near term, given the fact that many banks are chasing retail customers. Having said that, what we have done in Q2 is to reduce some of the high-cost deposits, bulk deposits, and that's why the deposit growth appears a tad less than what we normally do. But having said that, that will be corrected in this quarter. The good part is we are growing our CASA quite well. You would have seen that our CASA grew almost about 4% quarter on quarter. And this is on the back of a good Q1 as well. So the focus on CASA is helping us maintain the cost of funds. On the NIMs, one thing which I should clarify is the reported NIMs is 3.12. But as you know, in the July quarter, we had to make the change of penal interest to penal charges. So on a like-for-like basis, our NIMs has actually improved from 3.16 to 3.19. But given the fact that penal interest has moved to the charges fee line, the reported NIMs is down. So in terms of guidance for NIMs, we'll continue to operate around the same levels, Lata.
Okay, so what is the guidance on margins therefore?
It will be around the same levels.
Okay.
It also depends on when the rate cut comes through, because that will have a short-term immediate impact, given that 50% of the book is repo linked.
Okay, yeah, but at the moment looks, okay, food inflation is still running high and we may land up with a 6% headline in for the month of October as well. But without the rate cut, you would be around the same level, 3.1
Yeah, we
levels.
should actually probably, maybe 1 or 2 basis point even better as we continue to drive productivity, and, we should see around it plus or minus 1 or 2 bits.
Okay, what is the expectation in terms of the impact on P&L and balance sheet if the new LDR rules come? Because I think in the latest quarter, you all raised less deposits and more CDs.
But what the outcome we have to see, there are several measures which were taken. One is the tenor of the changing in tenor, the type of deposits, callable versus non-callable, and in terms of retail deposits versus bulk. Several steps were taken in terms of improving the LCR, and that is already translated into a better LCR for Q2 as compared to Q1. Our average LCR for Q2 was 115, vis-a-vis 112 in Q1. And we will continue to grow that, make sure that the mix is maintained and get our LCR levels improved over the next, in H2. So even if the new LCR guidelines come in the same form as the draft is, we should be ready to operate at the levels which has been set out by our risk management committee.
So what will the LDR be in case the new rules come in? What will be the loan deposit ratio you will gun for, and will it have an impact on margins?
So we are looking at, even if the new rules come in the same form as it is, we are trying to be in around the 110 to 115. That's the range we want to be in. And all efforts are on to make sure that we continue to grow the right deposits, CASA especially. And you would have also seen that our NRSA has started growing quite well after last year's dip. So last 2 quarters, we have seen the NRSA coming back quite nicely with some of the initiatives which we have taken in the GCC market, adding more RMs and a few other relationships. So it is going to translate to better liability growth, which will help us improve our LCRs.
Will there be any impact if the new project finance provisioning rules come? How much of your book is project finance?
No, that one, we have clarified that earlier in one of the interactions. We wouldn't have a major impact because of that, Lata.
Okay. And what is the growth you are guiding for?
The growth guidance, in the beginning of the year, we were around 18-20%. At this stage, we are looking at around high teens, close to around 18% on the growth.
So slightly lowered your,
slightly lower,
probably
because we
a couple of percentage points.
Yeah, we are mindful of the headwinds, the operating environment, and we want to calibrate. Because one thing which we follow, which you know quite well, our philosophy of maintaining pristine credit quality, asset quality, and keeping credit cost at certain levels, that won't be compromised.
Okay. Well, I was hoping that KVS Manian will also join us for the interview, but I'm going to toss this question to you anyway. What has changed between Shyam Srinivasan and KVS Manian? What may be the new growth strategy? What may be the tweaks?
Yeah, good question. See, for this Q2, of course, Shyam was there till 22nd of September. So pretty much, he was there for the entire quarter. And so the results are, I would say a reflection of what has been done. But more important, it's not the person. I think it's the continuity of the bank's operating rhythm. It's just that the baton has changed from Shyam to KVS. And Mr. Manian has been in this role for a little over a month as MD CEO. And he's taking time to meet people. He's doing his listening tours across the country, meeting people across levels, trying to understand how things are working. I'm sure he will have his own thoughts in his mind. But the good thing is, every year in Q4, we have a strategy refresh with the board. So it fits in quite well with his, it'll take 2 months to understand how we operate. And then we are having our internal discussions. Post that, I'm sure Manian will come and spell out, the next phase of growth for Federal.
Okay, so at the moment, no tweaks have been announced.
Nothing at this stage. Nothing at this stage. And, of course, we have a very strong team across all levels. And thanks to that, the performance continues.
Okay, Mr. Venkataraman, pleasure speaking with you. And many congratulations. The stock markets have given you a 7% thumbs up. So that speaks for itself. I don't have to, add any adjectives. One must say, to the credit of Shyam Srinivasan, as you pointed out, he was there till September 22nd. His last quarter has been a blazing quarter, and the markets are attesting to that. Thank you very much for joining us.
Thank you, and wish you all a happy Diwali, Lata. Thank you.
Likewise, wish you and your team as well a very happy Diwali. At the moment, Dhanteras is not being celebrated except for counters like Federal Bank. It is a bit of a red on the screen. It's not gotten redder. That's the important part. In fact, I've seen a little bit of recovery, as you can see, post 10 a.m. in the markets, but still down about 0.5% on the big indexes, mid caps as well, about a third of a percent lower. Bank Nifty is trailing well at this point in time, and of course, very ably supported by ICICI Bank and HDFC Bank. If those two are in the green, then Bank Nifty doesn't have much to bother. A small programming a note before I sign off on Bazaar. As we prepare to ring in the festivities this Diwali, tune in to our channel CNBC-TV18 at 2:30 p.m. today to hear out the biggest of market voices giving their tips on how you can make your portfolio prosper this Samvat.